This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I didn't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. The Fed doesn't matter.
No.
Nothing matters. Mount St.
Heck of a
Mary's
show
won.
yesterday, though. Heck of a show.
It was a good show. We had a lot of fun doing
Good
it,
stuff.
and there's some real transitory uncertainty there. Got some great guests today to drive forward. Julian Emanuel with us in a moment.
studio.
The highlight of the day, though, I'm sorry, Chairman Powell, was Lisa Mateo filling out her bracket.
Saw that.
The 3,000 people here at Lexington and 59th Street across from Bloomingdale's, out on the street, they came to a complete halt.
I know, exactly. I mean, that's where the smart money's looking at her bracket, seeing where she's going.
Can you explain old dukedom? Can you explain to our international audience this insanity about March Madness?
It's great. And actually today, arguably, Las Vegas is the best place to be because you
Why
go to a
is that?
sports book and they've got all like 500 games on and all this kind of stuff. It's crazy. Everybody's there. Everybody's got bets on a million different games, and it's just a fun place to be this weekend. You know, other than the Super Bowl, this is one of their best weekends.
This is
Vegas.
one of the best.
Yeah.
It's got to be, and it's a
Yeah.
lot of fun. We're making jokes about it, but it's a lot of fun. Julian Emanuel filling out his. I'm afraid to look at what does Ed Hyman do when he fills out his bracket. It must be something. What you need to know right now is the markets have turned. We had a solid tone through the Fed decides yesterday into the close of VIX under 20, and we have had a reversal in the last hour. Yields come in. The Sweeney yield is really, the two-year yield, 3.95% gets my attention with futures, a negative 26. From the Interactive Broker Studios, the Bloomberg Business Flash. Who'd you pick Final Four? Come on, who'd you pick?
I don't even remember. My strategy was horrible. Eeny, meeny. That's what I was going with. Good morning, guys. Well, it looks like that optimism from Fed Chair Jay Powell. His comments starting to fade. Futures turning lower. Now the attention shifting to housing jobless claims data, which comes out later this morning. NASDAQ futures down 0.6%, 132 points. S&P futures down 0.5%, 28 points. And Dow futures down 0.4%, or 170 points. We go to the two-year yield, 3.95%, down 2 basis points. The yield on the 10-year, 4.21%, and that's down 3 basis points. The Bloomberg Dollar Spot Index up about 0.3%. We have shares of Tesla down about 1% this morning. The company issued a recall for all Cybertrucks it produced and sold in the first 15 months of the market in the U.S. Apparently, the steel trim along the outside of the vehicle, well, it can come loose, and that can cause a road hazard. We go to Nvidia. They're investing big time. CEO Jensen Huang tells the Financial Times it plans to spend several $100 billion on U.S.-made chips and electronics over the next 4 years. Shares were higher. Right now, they're down about 0.5%. And then we'll stick with chips. SoftBank will buy semiconductor designer Ampere. It's a deal worth $6.5 billion. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Thanks for listening. 99.1 FM in Washington. Nathan in Washington emails in. He fills out his bracket. It's where his kids are applying or got into school.
Exactly.
You know,
Exactly. Yeah, exactly.
It's another way to do it. I guess it's Yale, right? Is the Ivy League school Yale this year?
Yeah, they're in.
They're in.
Yeah, they're in.
We'll see how
They're in. They won. They had a tournament this year, though. Yeah.
Yeah.
They're playing the Aggies. Oh, thank you.
Jessica
Harry.
Menton joining us at 9:55 as we're 2 hours away then from the bracket. Right now, joining us on the equity market bracket is someone with a definitive memo out, working with Ed Hyman at Evercore ISI is Julian Emanuel. We're thrilled he could brief us this morning. How does the Hyman-Emanuel world look with a 1.7% growth rate? It's got to change.
It definitely does change. And there's no question about the fact that when you think about what's gone on the last 4 to 6 weeks, you're at one of these points where if you go back before the pandemic, we saw the soft data lead the hard data consistently for the decade before the pandemic. That has not been the case since 2020 consistently, but the questions are now open as to whether it is. And so, whether it's 1.7, 1.5, or maybe even 2 if things stabilize. The risks are clearly to the downside, and you have to account for that in different ways.
ISI are the kings of hard data. What's the hard data you guys see?
So the hard data is very mixed. Our team, the surveys team, led by my esteemed colleague Oscar Slaughterback, basically it's very mixed. There's and it's even more complicated by the fact that we've had a very poor weather winter, and actually this has been a very poor cold and flu season. So there's also that going on. And then, of course, when you think about the stress in the jobs market, it's primarily concentrated in that area in and around 1600 Pennsylvania Avenue. So very, very conflicting signals.
How did Fed Chairman Jay Powell do yesterday?
Amazing.
Why?
Knocking the cover off the ball. Because basically what he needed to do was project a sense of calm in an environment that is anything but calm. And he did, and he made the point. You can argue whether the word transitory was appropriate for the situation or not, but he went out of his way to make sure that got across. And if you look at the last trade war in 2018 and 2019, inflation was, in fact, transitory.
So where do we go from here? If you're an investor, you're stepping back, you're saying, I've had at the peak to trough, I had a 10% pullback in the marketplace. If I'm in the NASDAQ, maybe 12 or 13%. Is that a healthy pullback in an otherwise okay market? Or do we have something really else to worry about here?
Well, in our view, this is a pullback. Okay. But look, this is one of these times where the path of policy really is going to set the narrative in terms of whether the pullback has more to go, or whether we think you're actually starting a bottoming process, let alone the fact something more sinister. The market, to be clear, is pricing stagflation right now.
Julian Emanuel with us, Evercore ISI, a lengthy conversation to get us started this morning. Wendy Schiller on the Department of Education will be with us from Brown University. And then on foreign exchange, which was really sophisticated this morning, Audrey Child-Freeman, a strong hour here on YouTube. Subscribe to Bloomberg Podcasts out on YouTube. Okay, Julian, so I did a nominal GDP math, which I learned from Ed Hyman while the Fed, guidance came out. Mohamed El-Arian nailed it in a note later in the day out of Cambridge, where he said, okay, you got a growth dynamic, you got an inflation dynamic, and nominal GDP came in as a sum total a little bit, but pretty much level nominal GDP. Do you guys model out that we'll see a reduction in nominal GDP? And if we do, does that fold over into reduced revenues at the top line?
Well, in theory, it could. But from our point of view, when you think about the trajectory of both sales and earnings in corporate America right now, it's actually reasonably strong, and it goes back to the psychology of the last couple of years. So in essence, corporate America has actually been preparing itself for the conditions we see now.
Brilliant. Let me jump forward then. Can they cut costs fast enough? Can they adapt to maintain margins?
They have shown an ability to do so, and the
kids don't see that.
And you bet against corporate America at your peril. You absolutely do. And from our point of view, the last couple years is the reason that the markets were able to survive the shock of the interest rate medicine that we got, is because we were so prepared. And then there's this wonderful little tool that's going to backstop productivity. I know we're tired of talking about it, but AI is
they let AI into Ed Hyman's shop?
Yeah, I can't believe it.
Can't help it.
How do you do AI with a black Sharpie?
All right, so Julian, if the inflation impact from tariffs may be transitory to some degree, how about the hit to just overall economic growth? Is that a serious issue that economic growth forecasts need to be tempered a little bit?
Well, and you're seeing it, but again, what's important is the psychology around the jobs market. It is literally all about jobs. And we like to say that on balance, if you're the retail investing public, you don't necessarily have to sell your stocks while you've still got a job. And so from our point of view, the way the jobs market unfolds is very, very important here. And, we're just going to have to see what the echo of the Doge layoffs is in the private sector.
So what are we doing with U.S. stocks here? I had late last year, early this year, I had everybody outside the U.S. rushing into the U.S. stock market. I'm hearing now some of the international buyers are leaving the stock market. What are we doing with this U.S. stock market?
So no question that's probably the biggest question we're getting, with international investors selling U.S. stocks. Our view is that even if you get a prolonged period of rest of world outperformance, this is not a zero-sum game. You look at the last period that happened. It's been so long ago, we can barely remember it. But in the 00s, all the boats floated. And frankly, again, this is why policy is so important. There could be a world where there is, very positive outcomes globally for policy. There may also be a world where that's not the case, which is why the markets and the economy and sentiment is on such an edge right now.
Tell us about the last paragraph of your claim note. You go in, and I know it's a look back, but you sum up the revenue dynamics, revenue misses, down the income statement, earnings dynamics, earnings misses. Do you believe? I don't know. I can go to the Bloomberg terminal, folks, and look up this statistic because Paul Sweeney taught me how to do it. There we go. J.P. Morgan, April 11th is when we get J.P. Morgan. What is that? That's 9 days after the world ends on April 2nd. Do you have any certainty about the uncertainty of your acclaimed last paragraph looking into the next earnings season?
Well, so this is going to be a season where what you're going to want and starts, as you pointed out, 9 days after, quote unquote, Liberation Day for tariffs. And so how is corporate America going to react to those 9 days and talk about the path forward? The issue here is, will we be able to chart a somewhat clearer path forward in terms of the commentary? It's less about what this quarter looks like, particularly for the financial companies, which, you're going to have mixed messages, great trading, slower banking. But it really is about the path forward and what the view is, whether this uncertainty will, in fact, begin to dissipate.
All right, so given that uncertainty, what are we doing right now? Am I buying stocks? Am I buying bonds? Am I buying alternatives? What are we doing here? Am I buying protection, maybe? I don't know.
No, we're not buying protection. That may change in front of April 2nd if the market were to stabilize and get a little bit complacent here. But I think when you look at this morning, this is really a process as opposed to an off to the races type environment where you typically see volatility come in. We are gently accumulating. We're rebalancing based on the drawdown with the knowledge that the preconditions that end bull markets, with the biggest challenge of those being an impending recession, and we have to have faith. And there is, as an investor, you've got to have faith, period. But having faith that the course of policy and the resilience of the economy is enough for 2025 not to be a recessionary year, which we believe it to be.
Quickly here, at Evercore ISI, how do you go through the process of the recession call right now? Jobs. Okay. I agree. And they have 4.4% unemployment.
Right. And so the question is, when the unemployment report comes out the first week in April, are investors, is the psychology around that report going to be such that we can take a number that's below 100,000 but still positive, okay? And what's the reverberation around that? And from our point of view, we think there will be a resilience built in at that point.
Julian Emanuel, thank you so much. Terrific summation brief there on economics of Evercore ISI and his equity market at work as well. Futures negative 26. Dow futures negative 142. Jess Benton coming to me with a really important note. I don't want to cite the bank because it's not the way we do it. We don't do internal trading memos on Bloomberg surveillance. But a major bank came out and they said, you know what, we had the Fed pop, but maybe we all ought to get ready for a little bit of tariff angst as well. And maybe that had something to do with the pullback. Jess Benton will join us later, where I'm sure she can go into more intelligence and detail on that as we can. The VIX closing under 20, now at 20.50. With our news in New York City, Michael.
Thank you very much, Tom, Lisa, and Paul. President Trump is expected to sign an executive order today instructing Secretary of Education Linda McMahon to dismantle the department. Kentucky's Democratic Lieutenant Governor and former educator Jacqueline Coleman said states like Kentucky depend on federal support for schools.
The United States of America would rather dismantle the U.S. Department of Education than invest in the kids and families who need it the most.
President Trump wants to turn education funding and control over to the states. Ukraine and Russia agreed in principle to a limited ceasefire after President Donald Trump spoke with the country's leaders this week. The tentative deal to partially rein in the grinding war came after Russian President Vladimir Putin rebuffed Trump's push for a full 30-day ceasefire. Meanwhile, European Union leaders are meeting for a two-day summit in Brussels this week, where they are expected to talk about the war in Ukraine. European Commission President Ursula von der Leyen today said security will be at the center of today's discussions.
These are decisive days for Europe, and we have a packed agenda for the European Council. Of course, we will discuss Ukraine, how to get to a just and lasting peace.
European Commission President Ursula von der Leyen. A senior military official says that stories about Jackie Robinson and those other American icons were removed by mistake. Robinson's son, David Robinson, says he was surprised the Pentagon removed the tribute to his father, adding, "We take great pride in his dad's service to our country as a soldier and a sports hero." Robinson was not the only hero whose story was removed as part of the Pentagon's DEI purge. Military websites also taking down tributes to the legendary Tuskegee Airmen, the first African-American military pilots. Meanwhile, the Pentagon has restored some web pages highlighting the wartime contributions of Navajo code talkers and other Native American veterans. The move came after tribes across the country objected to the removal of their histories. Global news 24 hours a day, and whenever you want it, with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Thank you for doing that. I used to sit at Fenway, and my grandfather knew Branch Rickey out of Ohio Wesleyan. And I'm not going to bore people with Branch Rickey now, other than he signed Jackie Robinson. And I used to sit there, Michael Barr, and get lectured 6 rows up at Fenway by my grandfather about how behind the Boston Red Sox were. Yeah. And he told me Pumpsy Green out in center field was as important as the guy in left field.
That's right. That's exactly right.
And,
boy,
I just don't get me going. You remember Jackie Robinson playing?
Yeah, I have a copy of the magazine. I think it was Ebony, 1970, and it was when Jackie Robinson passed. And I have that copy, and I was like, was just reading it. It's like, wow, this guy was something else.
I can't tell you enough, folks, about the history of this and what Mr. Rickey did out of Ohio West and out of Michigan. He had George Sisler on his baseball team at Michigan.
Yeah.
That, this is way back, folks. This is way back stuff where George Sisler reinvented batting, frankly, in baseball.
And remember, folks, I call it 2 versions of the Jackie Robinson story. There's the one, obviously, that was much more recent. But there was the one also with Jackie Robinson starring as himself in the movie. And I was watching that with my late father-in-law, and boy, that was enlightening. It really was.
Yeah, well, it's great. It's great to see at least some constructive news, I guess, on this reaffirmation. I don't know how you'd put it. And then you look, we go into NCAA tonight.
Yeah.
And you look how far we came after what Mr. Rickey and Jackie Robinson did.
Right.
I mean, it's just that simple as well. We're picking up the pieces after the Fed day yesterday. Green on the screen yesterday. It is reversed. Futures at negative 22, Dow futures negative 136. The VIX popping yesterday. I didn't realize it closed under 20.
Oh, yeah.
28 down to 20 is
Yep.
like, bull market. And we pull back a little bit now, 20.40. But Paul, I'm sorry, the yield space speaks.
Yeah, it does, Tom. I mean, we got the 10-year Treasury in about 3-4 basis points. We're now at 4.20% on your 10-year. The 2-year yield, 3.94, below 4% on the 2-year. So definitely some movements in the bond market here. And your Bitcoin, Tom, 85,000.
Did you notice that? It's, guys, seriously, a little bit of bit to it as well. 10-year real yield, 2.00%, all the way in 13 basis points off the Fed meeting, and the movement today, 1.87%. Some dollar strength, not up to DXY, 104. We're on YouTube. Subscribe to Bloomberg Podcasts. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures falling, and this is after the Fed's decision to keep interest rates unchanged. Well, it pulled the markets higher yesterday. Today, we heard from ECB President Christine Lagarde, who says the Eurozone particularly exposed to shifts in tariffs, and that kind of weakens the confidence in the ECB's projections. So we go to NASDAQ futures, down 0.5%, 112 points. S&P futures down 0.4%, 24 points. And Dow futures down 0.3%, 138 points. The 2-year yield, 3.94%. That's down 3 basis points. The yield on the 10-year, 4.20%, and that's down 4 basis points. To commodities, COMEX gold at $3,039 an ounce. We go to oil, Brent crude $70 a barrel, WTI crude $67 a barrel. And the Bloomberg Dollar Spot Index up about 0.3%. To earnings, we'll start with discount retailer Five Below. Its shares jumping 10% this morning. It reported fourth quarter results that beat expectations. Then we have some mixed results from Darden restaurants. You know, the owners of places like Olive Garden beat expectations for quarterly earnings, but its revenue fell short, so its shares are down about 2%. And professional services firm Accenture narrowed its earnings per share forecast for the full year. After the close, we get some bigger action. The likes of Nike, FedEx, Micron Technology, and Lennar. For more on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. Futures at negative 24. Coming up, Brian Weiser on media. Anna Wong on the Fed, of course, and Jay Bryson on the greater American economy. Wendy Schiller now from Brown University, the Taubman Center. Can't say enough about her value to Bloomberg surveillance. So education at the federal level, Wendy, goes back to Andrew Johnson, which started like with a desk and a Rolodex. And you go through, and the heart of the matter is brilliantly pulled out in my book of the summer, Partisan Nation, by the Berkeley crew, Pearson and Schickler, is even while the Republicans were against him, think Gingrich 94, 96, the Department of Education still grew. Explain the states' rights argument against a federal Department of Education is Ronald Reagan codified in 80.
Well, I mean, it really goes back to the push to integrate schools around the whole country. This is sort of a vestige of segregation, Reconstruction, and the sort of failed attempt to integrate freed, enslaved people into society. I mean, this is something that the South did for a very long time, and the North had de facto or residential segregation, and so basically the whole country was segregated. And with Brown v. Board, the expectation was people would listen to the Supreme Court. We should pay attention to the way that Brown v. Board fell flat after it was decided in 1954 and 1955. Nobody did anything because the Supreme Court doesn't have any power to enforce its decisions. It took, of course, Eisenhower to integrate a high school to get the ball rolling, but still, no, people didn't really do much. So it really took, federal intervention, the Elementary and Secondary Education Act, to say this is the law, that you have to spend resources, you have to restructure. So this is not that old. In other words, the sort of federal intervention, but it's always been viewed as intervention. And the other big thing is religion. Right? Can you give federal money to religious schools? Can you give remedial math and reading? Right? That's a big deal for a lot of parents who send their kids to a religious school. They pay taxes. They don't understand why they can't get the same federal funding. So these kinds of strains have been around a long time, and now the Trump administration is taking full advantage of them.
If the Department of Education goes away, how do our listeners' and viewers' lives change?
Well, if you are living in any district in the country, any congressional district in the country, and you send your children to public school, there are remedial math, remedial science, math, mostly math and reading services paid for by Chapter 1, which is run by the Department of Education. If there is no Department of Education, I'm not sure what happens to those programs. Millions of children will not get the kind of help that they need that is funded by the federal government. So local school districts will have to step in. We already see this for what was originally called the Education for the Handicapped. That name has changed in 1986. If you have, an IEP, individualized education plan for your student, that is federally funded and federally mandated. So if the Department of Education goes away, that goes away. So I think suburban voters in particular, urban voters, suburban voters, pay attention to how your school district funds these services because your kids could be affected.
So can the president disband or the Department of Education, or does it require some input from Congress here?
Paul, technically, Congress has to decide to undo what it did. So Congress creates, cabinet departments. They did it. Homeland Security was the last full cabinet department created under George W. Bush. That's Congress. Congress does that. And the president can't really take it down without the permission of Congress. This is a Republican Party that has done exactly what Trump wants them to do. So I don't think you get resistance, but technically, yes, they should vote to eliminate or disband the Department of Education. I think ultimately a compromise could be reached where you'll see federal aid to higher education, student loans, Pell Grants, those things curtailed, and some vestige remains providing the kinds of services and funding that I just described for K through 12. That's kind of where I see the compromise because the administration has been clear, I am an institution of higher education, that they want to prioritize the kinds of services that go to everybody, not just people who go to college.
All right, Wendy, on the geopolitical front, it's been a busy several days here as it relates to Ukraine. President Trump speaking with Mr. Putin, speaking with Mr. Zelensky. What do you think the White House really wants to achieve here?
I think there's no question Donald Trump wants to be the president that ends this war, that puts enough pressure on Russia and enough pressure on Ukraine to come to the table. There's going to be losses in territory for Ukraine. I think the administration is trying to basically convince Zelensky that there's no going back on that. And Putin, that it's in Putin's interest, not only because there are a lot of people dying and it's very expensive, just in terms of continuing to be a world player. So I think that's their positioning. That's what Trump wants. He's made that clear. I think Zelensky, believe it or not, had a decent week because Trump did not agree to a complete, stoppage or temporary suspension of aid from the United States to Ukraine. That's very important coming out of that phone call with Putin, and it probably surprised a few people.
Wendy, just let me do an audible here. We really appreciate your effort. I look at something like the Cook Political Report, and they're trying to game out the future, and it looks to be challenging now in your world. Are we anywhere near the Republicans lose the House? I mean, the people furious in their districts at GOP congressmen and women, do they jump over and vote for Democrats?
Well, a wise person once said to me, campaigns are always about two people, the incumbent and the alternative. And unless the Democrats can come up with a really good alternative in some of these very competitive districts, who is fairly moderate and has something to say that is different, that we'll do something different, not just, we're saving democracy, because that didn't work in 2024, and I don't think it's going to work in 2026. We're saving the programs that benefit you. We're saving veterans. We're saving healthcare. We're saving education. That is what the Democrats have to go back to. If they can find viable candidates, which they've done in 2006 and 2018, and they did very well against an unpopular incumbent president, I think they can, it's a very small margin. Of course, they can take it back, but that's a big if. And we just don't know if the Democratic leadership has that capacity to find those people and support them.
I got a minute. This is driving me nuts. Why can't the left find the new Scoop Jackson?
Okay, the Democratic Party looks like the left, but that's not really accurate, right? There's the left, a wider progressive movement, people engaged in social movements. Not all of those people voted in 2024, by the way, and the Democratic Organizational Party that's in the House and Senate. These are two different creatures, and they are not aligned. They are not talking to each other. They are not in concert together. And that's why, essentially, they lost the presidency. Lots of reasons, inflation, the price of eggs. But there's just not a lot of cooperation across those two entities right now. And Hakeem Jeffries is not Nancy Pelosi. Now, for people may love or hate Nancy Pelosi, but she was an incredible electoral strategist. And I just don't see that coming out of Hakeem Jeffries right now. And that is, the continuous search for leadership among the Democratic Organizational Party. Right. And we'll have to see what they come up with. But a presidential candidate for 28 is not going to save the Democrats in 2026.
Professor Schiller, I noticed Brown isn't in the bracket. Did you fill out your brackets, men or women?
No, I'm not a college basketball person.
Well, either are we. Wendy, thank you so much. What a contribution to the conversation here at Bloomberg Surveillance as well. I have been remiss of not mentioning, and Paul, you've been really good about this, the burgeoning women's game.
Oh, my goodness.
It exploded, 2 years ago?
It did. I'll just speak for myself. I've always, had a sense of how it was growing, but the Caitlin Clark situation there was just amazing the past couple of years, and that's kind of what kicked it off. I think for a lot of people like myself, you get a greater appreciation for kind of what they're doing, and you see it in the ratings for the TV networks. You see it in the stands. They're packing them in every game, so it's good to see.
Lisa, you forgot your men's bracket names. Do you remember your women's bracket names?
I do not. Another eeny meeny.
Okay, well, we'll see. We're probably Lisa Mateo will be in first place.
Exactly.
Tomorrow, that's what we can look forward to. Futures deteriorate, seriously, -26. The VIX, 20.55. Yields come in. 10-year yield, 4.20%.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will U.S. natural gas production exceed 3.27 billion cubic feet in January 2025? At IBKR forecast trader, the yes recently at 9%. Check the data, spot the trends, and start predicting today at ibkr.com/forecast. We've got futures in the red right now. This is as the Fed's inflation insurances start to wear off. We have NASDAQ futures down about 0.5%, S&P futures down 0.4%, Dow futures down 0.3%. The two-year yield, 3.94%. That's down 3 basis points. And the yield on the 10-year, 4.19%. And that is down about 4 basis points. To commodities, we'll check in with COMEX gold, $3,040 an ounce. We go to oil, Brent crude, $71 a barrel. The Bloomberg Dollar Spot Index up about 0.3%. Few companies making news. Nissan, they say they will cut about 20% of senior management positions. This is starting in April when the new chief executive takes over. Shares are down about 2% in Japan. And the Wall Street Journal says building products distributor QXO, it agreed to buy Beacon Roofing Supply. It's a deal worth about $11 billion, including debt. QXO is up about 4%. And Couche-Tard, Seven & I looking for potential buyers for their overlapping U.S. convenience stores by the end of the month. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much. Appreciate it. Stuff comes in over the transom. I mean, Stephen Trent at Citigroup is really good on the airlines. Okay. Frontier Air. I've never flown.
No, I've not.
Frontier Air. Lisa Mateo, chime in.
I have. They have the tiniest tables that come out. It was the size of my phone. That's how big it was. But if it's a short flight,
carrier.
Okay.
Citigroup resumes coverage.
Okay. All right. Neutral. Good for them.
Okay.
Neutral high risk rating.
I'm stuck with United being in, Newark.
Well,
I'm a United person.
Yeah.
Yep.
Let's get to it on foreign exchange. Audrey Child-Friedman joins us from London this morning with Bloomberg Intelligence. What does the foreign exchange market, Audrey, tell you about the sundry political panics that are out there?
Well, I think for a couple of days at least, we've kind of moved away from just politics. And we've gone back to looking at monetary policy. We've had a wide range of central banks meeting in the G10 space this week. And that's kind of been taking attention away from the very highly volatile political environment that we have to digest at the moment. And it was very much all about digesting the Fed policy decision yesterday. There's been a little bit of hesitation as to what it means for the dollar, but from my perspective, it doesn't really change the outlook for the dollar into the next few weeks and months.
Audrey, if I read the Telegraph or the Times of London or the Scotsman up in Edinburgh, the world's coming to the end in the United Kingdom. Everything is one part social, one part political, one part economic disaster. Tom Rees, Bloomberg this morning. United Kingdom boasts strong wage growth. Audrey Child-Friedman, which is it for the Bank of England in 15 minutes?
Well, I think the Bank of England will probably wait and see for the time being. The bias remains still towards more easing. But as you rightly pointed out, we have some stickiness in the wage inflation narrative at the moment in the UK, and probably so much uncertainty as to what's happening on the real side of the economy, with the tariff in particular, tariff or not tariff, that the bank may want to wait and see and digest the news flow for a while longer before going up and cutting interest rate again.
Audrey, we've seen the pound sterling kind of rally, 6% or so here this year to date. Is there more room to go?
I think so. I think the driver is mainly one of dollar weakness, in my opinion. That's helping sterling outperform. But I would also say that, when you think about the next big driver for FX this year, and in particular tariff, the UK is probably better positioned than the euro, for instance, in the sense that there could be some tariff mercy on the UK and the different approach taken by the UK government on retaliation retaliation in particular could give the pound some kind of an advantage. So I'm kind of confident that as the weaker dollar narrative returns, cable will go through 130 and potentially push towards 135. So it's not all doom and gloom in the UK, Tom.
Thank you, Audrey. Greatly appreciate it. Audrey Chow-Friedman, too short a visit today from London this morning. Futures negative 21. Some dollar strength. We didn't get DXY to 104, but a nice move forward here in dollar recovery, I would call it, over the last 5-6 days. Sterling 129.56 has sort of been stasis.
Yeah, but Tom, your euro's a 108 here. We're trying to get it down to parity for you, but
we're trying, but other people
not
are
happening.
going the other way.
I know.
We had one guest go 112, 115.
Yes, I heard. Yep, absolutely.
I think it's like the way we all feel about policy right now, as the market's jumble, is the way I would put it. Gold was 3,050. It's now 3,038, off a little bit off the Fed meeting. With our news in New York City, Michael Dunn.
Thank you very much, Tom. Paul, Lisa. President Trump is set to sign an executive order to begin dismantling the Department of Education today. Josh Cohen, senior fellow at the Education Law Center.
I'm not sure how that squares with sending education back to the states while they're doing other things like pushing new policies like voucher schemes. We've seen reports, right, about withholding funding from states that don't do what the administration says on equity and inclusion programs or on programs related to gender and so on. So there's a lot of mixed messages going on here.
Josh Cohen says President Trump, Secretary Linda McMahon, and Elon Musk's Doge operation have sort of hollowed out the department on their own. Cohen says there are questions whether that itself is even legal. A federal judge in Washington, D.C. has extended his deadline to noon Eastern time today for the Trump administration to answer additional questions about last weekend's deportation of alleged gang members. Severe weather hit the Chicago area. Roofs were ripped off buildings in Gary, Indiana, where several people had to be rescued, and a tornado is suspected to have formed. At least 7 homes have been destroyed. Gary Mayor Eddie Melton.
A lot of folks have been displaced from their homes, so we're working with the Red Cross to make sure that they receive the shelter, working with the Gary School Corporation because one of their schools was significantly damaged as well.
Mayor Melton also says some residents are without power. In Nebraska, blizzard conditions left roads covered in slick black ice. The University of California says it will stop requiring the use of diversity statements in hiring. Diversity statements ask people applying for jobs how they would contribute to campus diversity. The announcement comes as universities across the nation have faced directives from the new Trump administration. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
You know, you mentioned California there, and it's, Paul helped me here. Not first round, but second round. I take UCLA over Tennessee.
Ooh,
I have no,
really?
I like the color blue.
Okay, sure.
Tennessee's
pretty good, though.
This is where, Michael Barr, where's your first dumb upset like that?
See, this is the problem. The way our bracket is set up, and don't get me wrong, I love the way we have it going, but you're going, I like to go in reverse. I like to pick the winner and then trickle it down there. But the way it's set up, you have to go the other way. So, and then it ends up chalky, to be blunt with you.
Well, here's my thing. I got San Diego State, or whoever it is, over Ole Miss here. That's one of my upsets here. But I got Jess Metten's Texas A&M going a couple rounds. So, but then they're going to come up against Auburn.
Lisa, you want to chime in here?
No.
I'm good.
She did her bracket. Let's leave it at that.
I was stressed over it, very stressed over it.
But it's out there on social media. You can see it.
I will tell you my pick coming up.
Is Michigan, I'm sorry, I don't know the answer to this. Good morning, Rhode Island. Is Michigan State Bryant College of Rhode Island?
What's that? No. Oh, yes. Oh, yeah. I think I probably have to go to Michigan State on that one.
Yeah, I went to Michigan.
Tom Izzo, one of the all-time great coaches. Coach K from Duke says he thinks Tom Izzo is the greatest coach out there.
Do you guys, do you understand? Yeah. Do you understand that Sweeney's sandbagging us? He's at home with FanDuel.
Okay, that's right. Thank you, Art.
All of them. ESPN. He's like watching ESPN2 15 hours a day, and he comes in here and acts dumb.
I feel bad because my wife and my daughter are going to go shop for wedding dresses over the weekend, and they're going to be in Connecticut. And I said, okay, y'all have a good time because I'm going to be watching these basketball games over here.
Interesting.
Yeah.
So my bracket's already kind of screwed because I had San Diego State beating North Carolina in the play-in game, and that didn't happen. Thank you.
92.9 FM Boston. The Bryant Bulldogs. Smithfield, Rhode Island.
Boom.
Good morning. Go get 'em.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Good morning, everyone. On YouTube, good morning. Subscribe to Bloomberg Podcast. Good morning on your commute across the nation. The newspaper's huge number of really interesting stories last night. Lisa, how'd you find three of them? What do you got here?
All right, so here we go, right? We were talking about filling out the bracket. I did it. I have Michigan winning, okay?
Oh,
and the
David Weston got to you.
Yes, because David Weston came to me
I
yesterday.
see what happened.
And he said, I heard you talking about it. You have to go with Michigan. And I
It's
said,
not
I
a
have
bad
to
call.
do it.
It's not a bad call.
Okay, so if I win, I will take David Weston out to breakfast. Anyway, so we have some fun with it, right? But the Wall Street Journal has this story out today. Over the past 2 seasons, at least 7 Division I teams have been involved in unusual betting activity. So it's kind of like this other side. So it says some of the wagers involve people that are connected to that actual ongoing investigation into that gambling ring. Remember NBA's Jonte Porter, right? He got in a lot of trouble for that. So that investigation started with this look into Temple University. That started last month, and it's really spread into a lot of these other teams. But what it gets into is that the real problem behind it, too, are prop bets, because it allows bettors to wager on the individual player's performance. And so that's what's sparking
And Paul,
some of this,
I'm
too.
ignorant on this, Paul. In the middle of the game, you can look at somebody and bet on their three-point ability.
Yep. It's it's just amazing, and so I don't know how you police it. I can't imagine even thinking about policing that kind of stuff. But that's where we are, because it's right on your phone, Tom.
Yeah,
so
it is. So the
and kids are doing it too.
Yeah.
I've told you the story. I overheard a bunch of high school boys talking about betting in a, not just betting like at a basic level, but like serious, detailed strategies for betting. I'm like, where did they learn that?
But it puts pressure on the players, too, because the article was saying how the coaches are starting to hear from their players, like even like some of their family members are pressuring them, like, hey, maybe miss a couple shots or maybe do this.
This is frightening. And Brian Eggers is the one on this, right?
Yes, he is at Bloomberg Intelligence. We'll get him on.
Go through March Madness. Next.
Okay, Tom, I have a new choice for you on your next trip to Paris, okay?
Oh, nice.
Air France is launching a new first class.
That's what Tom means.
They're trying to target those, wealthy tourists, because the declining business customers, right? So these are customers who are willing to pay about, $12,000 for a flight from Paris to New York.
Excuse me, round trip.
Round trip, okay. So it's investing big time, more than $1 billion a year for the next 5 years. For these suites, they're known as La Premiere, okay? Fancy champagne, caviar, star chefs. It's a suite. It has more space.
That's what Tom
6.5 feet long.
Yep.
Okay, you get the fancy sleepwear, the skincare products.
Oh,
on top
absolutely.
Of it. You have to go. Flights start this spring, so now you can start booking, Tom, for your next trip. Okay.
And what's interesting about this, and full disclosure, folks, I do fly Air France. I love them to death. But what's interesting about this is it's not business travel. This is people out there, and they're going. And my father used to call it cattle car. He goes, we're not taking cattle car. And people will sacrifice to go business class, which is not 12,000 euros. I mean, it's shock. I don't know how they do it. It's like $3,300 round trip, JFK to CDG, business class. And that's a lot of money. I'm not downplaying it.
But it's worth it.
But,
especially when you're
it's a long flight.
Big fellow like Tom Keene.
Yeah.
No,
you're not going in some economy seat.
Mrs. Keene and Mrs. Keene and the kids fly in the back. And I fly business class. No, I don't. Lisa Mateo, I think, thank you for that. And trust me, and I know Redo, keeper of the Amex, is listening. No, I'm not taking La Premiere on Air France. Thank you for that. We look forward to you and David Westing humbling all of us. Yes. Of course, what we do is we find on this most fun day of the year, to me this is way more fun than the Super Bowl, is we understand that on page 42 of my agreement with Mr. Bloomberg, paragraph 3, I must have Purdue in the Final Four.
Yeah.
Must. It is part of my agreement. The lawyers, 3 lawyers leaned over and said, she insists that Purdue's there. Hail to the old Purdue. All hail to our old golden black.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. The Bank of England speaks after Mr. Powell spoke yesterday. They do a much better job on headlines. It's way more personal, way more direct, way more the visceral dissent and agreement than what you get from the collegial, we are the world tone of the Fed. Bank of England says 8 voted for no change, 1 for a quarter-point movement as well. They keep their main interest rate unchanged where it is. But to me, Paul, the leading number here, and we mentioned with Audrey Child-Friedman, the wage growth was constructive. Bank of England sees inflation rate rising to around 3.75%.
Yeah, that's not bueno.
For any society, that doesn't get it done. That's above where we are.
That's above where we are, 2.5%, 3%, depending on how you want to measure it. Bank of England maintains key interest rate at 4.5%, Tom. The BOE says gradual and careful approach to easing is appropriate. And BOV's Bailey says rates are on, quote, a gradually declining path. So that's where the Bank of England is.
Are they transitory?
I don't know. I'm not sure they use that over there. But we're all about that here.
Catherine Mann, of course, you know her from Brandeis. Good morning, Professor Mann. And, of course, her work at Citigroup with William Bowder. She's on the board of the Bank of England, and she drops her call for a half-point rate reduction, one of the subheads that's out there. Bank of England says economic weakness reflects demand and supply. I have no idea what that headline means. We'll move on here. Sterling right now. Pretty much on 129.78 on sterling. Bloomberg Surveillance this morning brought to you by CME Group, the world's leading derivatives marketplace, offering the widest range of global benchmark products across all major asset classes. CME Group, where risk meets opportunity. We thank CME Group for their support of what we do here. From the Interactive Broker Studios, the Bloomberg Business Flash. From Ann Arbor, Lisa Mateo.
Thank you very much. Well, it looks like that optimism from Fed Chair Jay Powell's comments starting to fade just a bit. Futures turning lower. Today we heard from ECB President Christine Lagarde. She says the Eurozone particularly exposed to shifts in tariffs, and that weakens confidence in the ECB's projections. Bank of England leaves its key rate at 4.5%, like you guys said. So we'll start with NASDAQ futures, down 0.4%. S&P futures down 0.3%. Dow futures down 0.3%. We go to the 2-year yield, 3.93%. That's down 3 basis points. The yield on the 10-year, 4.19%. That's down 4 basis points. The Bloomberg Dollar Spot Index up about 0.3%. Go to the euro, down about 0.4% at 108.51 against the dollar. Bitcoin right now is little changed, up at about 85,000. Shares of Tesla down more than 1%. The company issued this recall for all the Cybertrucks it produced and sold in the first 15 months it was on the market. Apparently, it's that steel trim along the outside of the vehicle. It can come loose, and that can cause a road hazard. Nvidia investing big time. CEO Jensen Huang tells the Financial Times the company plans to spend several $100 billion on U.S.-made chips and electronics over the next 4 years. Shares were higher. Now they're down about 0.2%. And we'll stick with chips. We'll go to SoftBank. It's going to buy semiconductor designer Ampere. It's a deal worth about $6.5 billion. That is your Bloomberg Business Flash. Paul and Tom.
Lisa thinks, is Mag 7 done?
I don't.
I just don't
It doesn't
buy
feel like it's a leader anymore. It's kind of one off. I don't know. The AI story seems to have taken a little bit of a pause. Yeah. That's how I think
It's so
about it.
2024.
Yeah.
At Morgan Stanley, she has the worst job. She has to tie in U.S. policy,
Good luck
the
with that.
cacophony of Washington right now, whatever your politics, into trying to hang on to your capital and maybe put it to work to make some form of return. Monica Guerra is incredibly experienced with legit budget duties for the city of New York, and also a lot of good work in the House of Representatives. You know the halls of the House. You must be on the phone. What are the Republicans, and separately, what are the Democrats in the House telling you about the madness down there?
I think that everyone is just trying to get through this as quickly and smoothly as possible, at least from the budget perspective. You know, they're essentially trying to take Doge and Elon Musk's recommendations and bake them into this new budget bill. One of the things that I try to remind folks is that while there's all of this market uncertainty around tariffs, cutting, and just general geopolitics, that by the end of the year, so if you're looking August to September, if we're thinking about federal fiscal year is what I'm talking about, there's likely to be some resolution and for the political sort of rhetoric to die down for a moment, because those tariff piece and the cuts are all going to have to be baked in, right? They're going to have to actually finalize them to vote on that bill.
I mean, the power of you and Michael Zezas at Morgan Stanley together is really a lot of academics. Do you see tariffs in any way moving the needle on revenue generation for the budget?
The very high end estimates is that they think they can get $1 trillion, around $1 trillion. 1.3 was the highest estimate I've seen. Realistically, it's seeing closer to maybe 700, 800 billion. But you have to take into account that they're also going to be tabulating existing tariff revenue in that. They're going to essentially be taking all tariff revenue, putting it through this external revenue service, right? A new sort of quasi agency that's going to funnel the money through the federal government to the Treasury versus just going straight to the Treasury, right? It creates a dynamic where now they can count it to the budget. So it's already existing revenues that the U.S. Treasury is already receiving, plus new. So we have to see exactly what that's going to be in total. So do the new tariffs actually move the needle that much? Not much.
Does the phrase shell game come to mind?
Not just the federal government in my mind.
She just lost me there completely.
But I
Stay
know,
with this, folks.
But she knows what she's talking about. Monica, talk to us about kind of the budget, keeping the government running, the budget. I'm told, just give us the timeline. What should we be aware of here as investors?
They're going to have a final sort of blueprint by May. That's what we're expecting,
okay.
May.
And right now we're March. Okay.
Right now we're March. That you'll have an understanding of what are the top priorities. That doesn't mean that they're not going to change. They can change, as we all know, right until midnight before the bill is passed. So we're likely to get those final priorities in May, and then the Senate is really going to have to hammer out what they want this tax bill to look like. For us, when we're thinking through the cuts, the biggest risk to the economy is, do they go too far, especially on the labor piece? And we're already seeing some softening with the jobs numbers and with consumer data. And so how far does the federal government go? How does that impact not just federal labor, because federal labor only accounts for 1.9% of the labor force. It's how do the second derivative, the contractors, right, get impacted through all of this change?
What percentage of the labor force are contractors?
I'm not sure exactly that, because if you're thinking about it's not just contractors, it's also your grant recipients, nonprofits, universities. So it's a broader ecosystem. And,
Sure.
and so I don't have a direct estimate on that today. But when we're thinking through this, it's how deep do they go? And then do they actually, make good on the bet that then they can grow, spur growth in the second half of this Congress, meaning 2026, because Trump really has these 2 years to do business.
But at the Northern Illinois University, you were hunkered down there waiting to do your public policy career. Is there any history in the United States of America that budget cuts create growth?
That budget cuts create growth? I don't think so. That's from my understanding. Budget cuts do not create growth. Fiscal stimulus, right, creates that multiplier effect, right, for the economy.
Which we saw with 1, 2, and then the Biden stimulus.
Well, one of the things that you're trying to sort of balance here is that part one of this administration is that restructuring, downsizing, cutting, and part two of his legacy setting for Trump. So we're looking at the growth piece on this back end of this. So if you're looking at Trump 1.0, and the first time he was in office, he started with the stimulus piece and then followed with austerity. So we're in the reverse scenario now, and we just have to see if it's going to work out.
So when you're talking to your clients and they ask you about the Trump strategy of near-term pain in the economy for longer-term gain, do you tell your clients that's something you can bank on, or are you kind of dubious as to whether that can take place?
I would say more in the latter category, right, of making sure that we're being prudent about how we're positioning and the sectors and industries that we're looking at. So one of the things I found interesting through, not just assessing which sectors and industries are buffered from tariffs, is that they actually also align with many of the pro-growth deregulatory policies of Trump. So things like financials are likely to do well. You could see some activity on alternative energy in the United States. So not traditional energy, but alternative energy. Utilities, other defensive sectors have that buffer from tariffs. But when we're thinking about pro-growth, it's healthcare, financials, energy in that alt section.
But do you see pro-growth if Jerome Powell's modeling 1.7%? I mean, we're in a legit stagflation concern. I don't understand. I get Washington doesn't understand economics and finance. We all know that. But can they really establish a quote-unquote pro-growth strategy?
I think they can in 2026. So for us, you have to account for the tax cuts and deregulation coming to really fruition in that second year. This year, no. So from a tactical perspective, it's trying to find, when I'm highlighting those sectors, it's where we see an overlap with tariffs and growth policy, right? Tariff insulation and the growth policy. So I think that that's an interesting place to look, and trying to essentially hedge on both of those issues.
Thank you so much. Monica Guerra,
Really
this with Morgan Stanley on policy this morning. Now on gold, hugely anticipated with the Gabelli Gold Fund. Chris Mancini with us, the portfolio manager for Gabelli Gold. Where do you model gold out? I mean, Chris, if you take a vector, you take the price of gold logarithmic y-axis, and you extrapolate out where we are, how brave are you to extrapolate out the price of gold?
That's a great question. I'm not that brave, Tom. I think that's the answer. After years in this industry, it's like, it's very, what is it? The, fortune favors the bold, but I'm not so sure it makes sense to be too bold. I mean, I think, but I do think that, that it's not so brave to say that I think that gold's at least going to stay at this price here. It'll be at least where it is now by the end of the year. And I think that, so that, maybe that is being bold, because I think that by and large, there are a lot of people, on the sell side who are saying that it's going to be lower by the end of the year.
I mean, I love his R squared. I think they have his. First of all, his R squared is lower than Mario Gabelli's.
Yeah.
But I think nobody in the world has an R squared is removed from the performance of the S&P 500 like Chris Mancini.
Yes.
Hey, Chris, on my screen, what I've got is the price of gold, and I look at it every day, and I quote it every day for our listeners and viewers here. How about the gold mining companies?
Yeah.
How do you think about them? How do they typically perform vis-a-vis the price of gold?
Yeah, well, that's the key, I think, is because what's happened is that over the past 5 years, what typically happens is that there's leverage involved in the gold miners relative to the price of gold, and that's because there's operating leverage, right? So it costs, say, right now, $1,500 an ounce to get an ounce of gold out of the ground.
Wow.
And when the price of gold was, it's right. So it's pretty expensive.
How has that changed over the years?
It's changed. Yeah, it's changed pretty significantly. So before COVID in 2019, it was around $1,000 an ounce. Okay. Now it's around $1,500 an ounce. And that's primarily because during COVID, it was extremely, extremely difficult to mine. Like obviously you can't mine from home. And there were lots of restrictions in place and things like that, just social distancing, quarantining. Someone got sick, they had to quarantine everybody around them. The state of Western Australia essentially had a lockdown of the entire state. So you couldn't get people in and out of the state. And there is a lot of labor that works in the Western Australian mines that came from Eastern Australia, stuff like that. So the wages in Western Australia went up a lot. And all these little idiosyncratic things that happened all over, it really caused the price of gold, the cost to mine gold to go up so much. And then the costs have kind of stayed there. So we're still at this level where so what happened was that the price of gold was $1,500. The cost was $1,000. The price of gold went to $2,000 during COVID. The cost to mine went up to $1,500. So the miners didn't really do that well, whereas they normally should. And what's happened now, though, is that the price to mine is $1,500, but the cost went from $2,000 to $3,000. So we're seeing that the leverage now, but it hasn't been reflected in the miners.
Right. Help me with AEM, like one of your major holdings, Agnico. I guess it is a Canadian company, venerable. It's been around 60 years. Paul, it's not Apple Computer return, but I'm sorry. You look at it versus a major U.S. bank or a major consumer goods. I mean, basically, Chris, they're minting money, right? I mean, the total return is substantial.
That's very true. No. That's very true. I mean, that's why I said. I mean, we don't need to be that bold to predict that gold's going to stay at 3,000, but that prediction would mean that for Agnico Eagle, for example, at $3,000 an ounce, they'd be generating around an 8% free cash flow yield. So they're generating, and with some growth, so that free cash flow yield should grow over the next couple of years. And so these companies compared to banks, compared to tech companies, are generating, substantial free cash flow.
So, and folks, off the 2022 bottom, Agnico Eagle's only up 187%, 51% per year. Chris Mancini, 59% of your portfolio is Canadian. Tariffs, discuss it. I mean, how do tariffs play in to moving a bar of gold over to Lisa Mateo's account in America?
Well, that's a good question. No tariffs on gold yet. I mean, but the good thing about gold really is that it's, such a large amount of value is in such a small amount of space because it is so dense, right? And it's so, meaning that theoretically, if there were tariffs on Canadian gold to come into the United States, the Canadians could send their gold to Switzerland on a, one plane load wouldn't be that big of a deal to send it to Switzerland. And then the Swiss could do it, could sell it in Germany or in, somewhere in Arabia or something like that. So it really shouldn't affect the miners too much, thankfully.
20 seconds. Is White Fang your favorite movie? The Klondike Gold Rush?
Yeah. Well, it's up there. I do like what's the other one? Klondike Strike, the Alaskan Gold, right? So They're all really good.
Don't be a stranger. Chris Mancini, thank you so much. Thanks, we don't do enough on this, folks. Michael Barr's screaming at me, do more on the gold mining companies. I promise we will. Chris Mancini, working with Morangi and Gabelli over at Mario Gabelli's shop this morning. Right to it with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Trump today expected to sign an executive order directing the Secretary of Education to take all the steps she can to close down the department. Kentucky's Democratic Lieutenant Governor and former educator Jacqueline Coleman said states like Kentucky depend on federal support for schools.
If the U.S. Department of Education is dismantled, the states who will suffer the most are places like Kentucky, and the people who stand to lose the most are our most vulnerable.
Most funding for public schools already at the state and local level, and it would require an act of Congress to get rid of the agency altogether. However, President Trump vowed he will strip it down as much as he can. Ukrainian President Volodymyr Zelensky says he has agreed to stop targeting Russian energy after a phone call with President Trump. Bloomberg's David Guerra has more on what the two leaders discussed.
Ukraine has nuclear energy assets, has power plants, and President Trump, according to Secretary Rubio and National Security Advisor Waltz, indicating in that phone call he thinks that maybe the U.S. is best positioned to help run those facilities. So it sounds like things are proceeding apace in this kind of bifurcated way. The president kind of dealing with Russia on the one hand, Ukraine on the other, and it seems from that readout the next meeting is going to take place in Saudi Arabia on March 22nd and 23rd and 24th.
Bloomberg's David Guerra, and despite word of the partial ceasefire, both Russia and Ukraine exchanged heavy drone attacks overnight. Today, first day of spring, global news, 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Live chat out on YouTube. I don't even know how this got started. They're imagining me with a bolo tie. You know, one of those Texas ties.
Yeah. Well, maybe if we go down there.
I wore one for, I think, 2 days in Nashville years ago.
Yeah.
And it looked like an Eastern boy faking Southern. I mean, it's just, you got to have a certain...
All right, if we go to Texas, Tom, we're going to Fort Worth. That, to me, is Texas. Yeah. I love that.
I strongly agree with that. Yeah. Dallas gets all the love.
Yeah, but Fort Worth.
But Fort Worth is where a lot of soul
Cowboys is there.
I mean, Joe Weisenthal's huge down there.
Oh, I know.
His band, Light Sweet Crude. I mean, they go into Austin, South by Southwest. I mean, you know, people go mental. I think they may open for Asleep at the Wheel this year. I don't know about that. Joe Weisenthal, the other day, looked to Odd Lots.
Yes.
Out on Bloomberg Podcast. Bloomberg Podcast is just not the Paul Sweeney show.
No.
Bloomberg Podcast is a compendium of all we do at Bloomberg. It's the conversations of David Guerra and the Big Take. I can't say enough about the role Tracy and Joe are on right now with the Odd Lots. Really, really compelling stuff.
And this Barry Ritholtz guy, he's also
this Ritholtz, he's got a book out he's flogging. He's in Business Insider today. Did you see him? Like you know, he's all. Did you see that, Lisa? He's all slicked up and.
I did. It was almost in my newspapers.
Team of PR people. They got him a haircut. It's amazing. Barry Ritholtz out with a must-read: How Not to Invest.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, we've got a different picture from earlier this morning and even yesterday when the Fed's decision to keep interest rates unchanged, it pulled the markets higher. Now, futures lower. The attention shifting to housing, jobless claims data that's out in just a few moments. We'll start with NASDAQ futures, down 0.5%. S&P futures down 0.4%. Same for Dow futures. The 2-year yield 3.93%, down 4 basis points. The yield on the 10-year 4.19%. That's down 5 basis points. Over to commodities. COMEX gold $3,045 an ounce. We go to oil. Brent crude $70 a barrel. WTI crude $67 a barrel. The Bloomberg Dollar Spot Index up about 0.3%. To earnings we go. Discount retailer Five Below. Well, it's actually down about 8%. It reported fourth quarter results beat expectations. Then you have some mixed results from Darden Restaurants. They own Olive Garden, Longhorn Steakhouse. It beat expectations for quarterly earnings. But here's the thing. Revenue fell short of estimates. Its shares are down 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is the Bloomberg Business Flash. All on top.
Lisa, thanks so much. We're fair and balanced here. Sweeney's is like disgusting. Focus on Duke. Jay Bryson joins us now.
This is a problem today,
so we can be, we're fair and balanced here on UNC. Jay, I got to get the claims in a moment, but on UNC, I mean, at least they enter strong, don't they, into March Madness?
Okay.
Here you go, Paul. I don't know if you can see this, but I've got my UNC cup up here.
There you go.
Yeah. It feels like 2022 again, right? Everybody doubted them in 2022, and then we came storming back. We beat Duke in the Final Four, ended Coach K's career. So it's starting to feel like that right now.
You could say that Chapel Hill. I mean, they're not transitory right now. How transitory is our economy, Dr. Bryson?
Well, so let's put it this way. In terms of inflation, I don't think you are looking at another, if you have all these tariffs go into effect, I don't think you're having another, episode like we had back in 2022, in which inflation kind of shot up. I would think inflation is going to go up, but I don't think you're looking at a redo of the 1970s here. A tariff should be a one-off sort of thing. I think the FOMC is definitely going to want to watch and see what happens to inflation expectations as you go forward.
Jay, when you talk to your clients, what's the biggest concern you're hearing from them? Is it a renewed inflation? Is it a slowing growth rate in economic activity? What are you hearing most from your clients?
Well, actually, what we're hearing is just kind of the uncertainty right now, with tariff announcements coming and going. Businesses like some sort of certainty, and it's really hard to plan right now in terms of capital expenditures. If maybe there's going to be tariffs, maybe there's not going to be tariffs. So that's kind of, I think, the concern is just the uncertainty.
So what are you telling folks here as it relates to kind of the economic outlook here? I mean, is it pare back some expectations here? Because the administration is kind of talking about this story of short-term pain for long-term gain. Does that make sense to you?
There is an element of sense there that it makes to me. So what we're telling clients is, we have baked in some tariff assumptions into our forecast. Now not the full boat, a 25% tariff across the board on Canada or Mexico. We've kind of pared some of that back and trying to figure out what the probabilities are. But essentially what we're saying is we're looking for slower growth. And so yesterday, if you look at the summary of economic projections, we're kind of very much in line with that. We're looking for slowdown in growth later this year as the tariffs hit, and a bump up in inflation. Now, as you move into next year, you have a better regulatory sort of environment or easier regulatory environment. Maybe you get some tax cuts at the end of this year. That should help growth next year. But I think this year, it's a modest stagflationary shock to the U.S. economy.
Jay Bryson with us here. Thrilled to have him here this morning. And, I'm looking, Jay, at claims here. If I get a 4.4% published banner from the Fed, what does 4.4% equate over to in claims, roughly? Does it get us out to 300,000 claims?
Tom, I don't think it gets us that far, but I think you're probably looking at a you're probably looking in the 250 to 275 sort of range. If you get up to 300, if we go from, roughly 220 right now up to 300 per week,
right,
you're getting pretty close to a recession at that point. So, I think, your 4.4, you're looking at us getting up into the 250 to 275.
Jay Bryson was brilliant there. We'll put that out on Single Best Idea today. That's really important, folks. Previous number, 220. The survey for now, here in 20 seconds, 224. You just heard Dr. Bryson model out 4.4% to 50-ish, and 300,000 would be some angst, not only for the Trump administration, but all of us in America. We're out on YouTube. Subscribe to Bloomberg Podcast. Good morning on your commute across the nation. Lisa?
And we go to economic news. We'll start with initial jobless claims as they do start to come out at just about this time, 8:30, as we kick things in. Now, this is for last week. So the expectation was for 224,000, coming in at 223,000. So just a little bit lighter. It was revised. The last one revised the prior up to 221K, so slightly higher revision. We go to existing home sales for February. It was for 3.95 million. Came in at just coming in. Oh, still not out yet. Still not out yet. It's getting there.
Because maybe some of those folks were laid off. I don't know.
Okay, it could be. Let's go to the reaction, though. That's what we want to get to.
That's 10 o'clock. We're going to get the home sales at 10 o'clock.
At 10 o'clock, yes. So NASDAQ futures right now down about 0.5%. S&P futures and Dow futures still down about 0.4%, Tom.
I mean, you butchered that. Is that because you're not focused?
You're looking at your bracket
coming up. You picked Michigan over UNC?
I did.
I mean, her bracket's going to be the bracket to beat. I just got a feeling.
You know that. That's the way.
It's
just, I heard she was up in the food court. Scarlett, tell me what to do. Scarlett Foo's fault. Our economic data, all of our good work on economics, is brought to you by Commonwealth. Join over 2,000 independent financial advisors. They are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. We are so honored to have Jay Bryson with us at Wells Fargo today to give us some perspective. Jay, I'm remiss. The Fed decides out. I don't talk about the Fed. But that was really something yesterday. I turned to John Farrow as we walked out of the studio. I said, John, that was the oddest meeting I've ever attended. Do you agree it was just surreal in this environment? How Chairman Powell threaded the needle?
Yeah, I think the FOMC is probably as confused as we all are right now, right? I mean, they marked down their projections for GDP growth this year by, I think it was like 0.4%, pushed up the unemployment rate, and at the same time, they pushed up their expectation for inflation. What was interesting to me about the statement is, what they said is that the economic or the uncertainty has increased. I mean, that's obviously a nod to the uncertain tariff policies that we see right now. So, unfortunately, the FOMC is kind of caught between a rock and a hard place here, in the sense that if inflation goes up, you want to be tightening, but if the unemployment rate goes up, you want to be loosening. So what do? Probably the best course of action is to wait and see how the economy reacts. And so I think we've been talking about data dependency up to this point. They're going to be completely data dependent in the coming months.
Yeah, he basically said that. Paul, get one more in here.
Hey, so Jay, when we sit here, I'm looking at the labor data that just came out here, initial jobless claims. It seems the labor market, it's still darn solid, 223. That's a number the world can live with, right?
Oh yeah, I mean, if it stays at 223, that's fine. I mean, it's interesting when you look at that, the initial jobless claims. So these are people who are filing for unemployment insurance for the first time, and then you look at the continuing claims. These are the people who continue to file for unemployment insurance, and that remains up about 1.9 million. And about a year ago or so, I mean, we were 1.8, 1.7, somewhere around there. And so I think the point is, and this phrase has been used before, it's a no hire, no fire sort of economy. So the no fire shows up in terms of the initial jobless claims rates, but the people who lose their jobs, they're having more difficulty trying to find a job because people really aren't hiring right now either.
Jay, thank you so much. Chief economist at Wells Fargo. That was brilliant. But the way he framed out claims there, the weekly data, folks, to get out from the 223 this morning. And then we got out to, he said, 240, 250-ish. And he said, I think I heard less doubtful out to a grim 300. I didn't hear that from him today.
He also made that call there, Tom, at the beginning here. He thinks his Tar Heels can make a little bit of a run here in this tournament here. So we'll have to see. They made it into the big dance, and we'll see what they can do.
It's like what Mr. Ailes invented. We're fair and balanced.
Sure, we are.
So we do that.
We'll do a little Carolina.
There was no pressure on Lisa to pick Michigan. I mean, none whatsoever.
David Weston looking over her shoulder.
I haven't disclosed what I did. I have St. John's and Duke final 2.
Boy, how good would that be?
And just to keep my colleague happy, Sweeney and I are barely on speaking terms. So I went with Duke.
Wow.
I'm sorry.
There you go.
It'll never happen again. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures in the red as the Fed's inflation insurance is, well, starting to wear off. We have NASDAQ futures down 0.4%. S&P Dow futures down 0.3%. The 2-year yield 3.94%, down 3 basis points. The yield on the 10-year 4.18%, and that's down 5 basis points. Over to commodities. COMEX gold $3,047 an ounce. We go to oil. Brent crude $70 a barrel. WTI crude $67 a barrel. The Bloomberg Dollar Spot Index up about 0.3%. Few companies making news. That's Nissan. It said it's going to cut 20% of senior management positions. That's starting in April when the new chief executive takes over. Its shares are down about 2% in Japan. And Sotheby's Auction House going into the watch repair business. It's partnering with WatchCheck. It's an online watch repair. So now you can get your timepiece repaired and sold all in a one-stop shop. And finally, the European Union delaying its proposed 50% tariff on American whiskey until mid-April. It was originally set to take effect April 1st. That is your Bloomberg Business Flash. Paul and Tom.
Oh, thanks so much. This is a joy and an honor. Brian Weiser with us today, and he's got some fancy PDF I didn't read out today, which we'll talk about in a moment. But let me frame this for you. No one I know has believed more in our ability to sit in our living room and look at the screen like Brian Weiser. No one. The death of TV. We're all going to die. It's all going to go away. And a single voice over many years has said, wrong, wrong, wrong. We don't know what it's going to be, but we're going to be glued to it. Weiser nailed it. I'm doing an audible right now. You go into Vancouver and you go up British Columbia 99 to Whistler Mountain.
Oh, now we're talking.
You grew up in Vancouver. We've got this idiocy of a 51st state. I'm editorializing. Good morning. I grew up in Rochester. Our audience thinks Canada ends somewhere just east of London, Ontario. For Western Canada, for Whistler, what does it mean to lose the American audience?
I think it's a big deal because there's a decoupling, very, very conscious now between the countries. It's hard to overstate it.
How do Canadians feel about kind of what's Tom's been talking about, what's been happening over the rhetoric?
I think people are literally preparing, like asking questions about civil defense.
Wow.
It's not an overstatement.
But the difference here, forgetting about 120 miles from Seattle north to Vancouver, is we don't understand Vancouver's hardwired into the Trans-Pacific
Yeah.
market.
Yes, good point.
So what does Vancouver do? Build out China? Build out Japan? If America's going to walk away from British Columbia?
Well, the APAC connection is huge. I mean, before I left Vancouver, I started to learn Mandarin because I thought this would be useful if I'm going to stick around. I didn't, so I didn't continue learning. But the point is the connections are tight. Now, with that said, you see the news yesterday, China executing 4 Canadians. This stuff happens, and so it's not like relations with Canada and China are great. But with APAC more broadly, I think...
The broad Pacific Rim.
Sure. And then, but also I think the Europe connection are key. You saw the military news yesterday, the funding news that Canada's going to be part of this arrangement with Europe, which excludes the UK, interestingly.
Okay.
So you're going to see more European connections too, even from Vancouver.
I sat in Breckenridge once, and I watched Canadian coverage of the Olympics.
Yep.
And the Olympic coverage by Canadian TV was so superior to the soap opera of American TV. It was so superior. Why don't you start off with Mr. Weezer on the media?
One of my favorite towns anywhere is Vancouver. I'd love that. I take the seaplanes and just have them fly us around. Brian, talk to us about the global advertising market today. Where is it all just about the Google, the Amazons, the Facebooks of the world? Is that the story?
They're still dominating. We just saw numbers from RTL this morning, which is, biggest broadcaster in Europe. And, kind of weak, -5 on the quarter, up 2 on the year. And you see this sort of trend across Europe, for example, and many other countries where you see kind of a negative number for a lot of domestic folks, maybe flat. But the Googles and the Metas and the Snaps are up like 10 and 20%. And so we had, past tense, a really healthy ad market. And the digital giants just crushing it. I think they continue to take share. Back to the point about what we're saying about television, sure, in the 2010s, TV held up quite well. That won't continue into the 2020s. But I think that, Google, Meta, Snap, Pinterest, Reddit, et cetera, they just continue to take share.
The streamers are getting more and more eyeballs. Are they getting more and more advertising dollars?
Yeah, well, something like Amazon, is just going to crush it because lighting up everybody on Prime Video initially, right? They just opened up so much ad inventory so they could take share of a market. For example, Netflix, same deal. Apple clearly wants to be playing in this space too. So you have these new entrants, and they're absolutely going to be doing billions of dollars of revenues each.
This experiment we do, folks, with YouTube, we have been absolutely humbled by the response, particularly the international response, the leadership at Bloomberg of Ray Schillinger on this, and of course all the people at Google as well. Give us an update on the absolute dominant. In podcasts alone. Yep. When I first won Rewind Awards at Apple, they were dominant. YouTube's taken over the podcast market, right?
It always befuddled me that Google and YouTube didn't lean in more heavily earlier on to the fact that they've been the biggest audio platform for a very long time, like on Earth. And yes, the video piece to the podcast and video streaming of what is audio helps too. But they're just massive, and there's still a huge untapped opportunity.
Yeah, Lisa emails in from Ann Arbor, Michigan. Lisa says, ask Brian Weezer, is this going to be monetizable? 5 years out, do creators and influencers like Lisa Mateo, do they get monetized on YouTube?
Yeah, absolutely. The amount that they pay out, this is a terribly underestimated piece of the advertising industry. The amount that Google pays out to creators is a huge chunk of, I don't have the number off the top of my head. They disclose a number that allows you to calculate it, but it's a very large number, in the tens of billions of dollars annually at this point.
Hey, Brian, you got a great graph there. I like graphics because they make it nice and simple for people like me. Basically, you're looking at advertising shares between, internet, outdoor, TV, whatever, local TV publishing. It's basically, when we got to 2030, it's all internet.
Yes.
What do the Warner Brothers Discoveries of the world do? What do the Paramounts of the world do? What do the Comcasts
Everybody else has to focus on subscriptions or other revenue streams. Nothing wrong with that. But hey, here's the thing. Most people don't understand just how much money is spent on pay TV in the United States, for example.
Yep.
The total video spending is about $150 billion a year. About $100 billion is going to traditional distributors, Comcast, Charter, et cetera. There's a huge amount of money to be peeled away to fund all these subscriptions. That is dramatically underestimated.
What's the number one thing we get wrong about this whole digital experiment? I put you in a very limited group. Rich Greenfield, Moffett and Nathanson, they published Cord Cutting today. You guys are like on this pantheon of wisdom from 10 and 15 years ago. What's the number one thing we get wrong about what our kids are doing, what we're doing in our homes, and particularly in our living room with YouTube?
Oh, wow. There's so much we could go down.
Yeah.
Well, first of all, I think it's really important to think at a bigger picture of the business. When we think about the advertising side, this is all part of a supply chain. Advertising is part of a supply chain, supporting businesses who are trying to do something. Marketing, for lack of a better word, and advertising supports those overall goals. The consumer consuming media that's ad supported is part of the supply chain. And I think that we don't even think in those terms. So that's maybe the first thing. I think the other thing that we underestimate is that we don't really know a lot, as much as we think we know, about how people consume media. Measurement is terrible.
I agree with that strongly. I agree with that strongly. What's the biggest mystery? I got 1 minute left. What's the biggest mystery?
How much time people spend on TikTok or
time spent listening.
Yeah.
Folks, these are statistics.
Measurement's terrible.
My team shows me. They just showed me one from Washington 99.1 FM. It's stunning how much people listen to Lisa Mateo.
Yeah. But we don't, I'm saying the quality of the measurement is poor, right? We don't have as much detail as we should have. Downloads. Do you know how many downloads you get to a podcast? Do you really understand it? We don't. Like, we're probably underestimating a lot of these consumption habits. That's my point.
Sparta tells me I'm not underestimating. He says, you know, if I'm lucky, the badge will work on Monday.
Right. Exactly.
Brian, don't be a stranger. Are you based in New York?
Still
or are
Portland,
you out in
Oregon.
Vancouver?
Still Portland, Oregon.
Another great town.
You're in Portland, Oregon.
Still in Portland, Oregon, yeah.
How's the
For now.
economy out there?
It's meh. It's gotten better. It's gotten better.
Yeah.
But no, I think that Portland is still has many positive attributes, is what
There's
I say.
a cigar bar downtown, right by the hotel I was staying in. There's a cigar bar. It's a stucco building. And the guy in there is the smartest guy I've ever met on cigars.
There's some whiskey lounges too you'd probably like.
No, I missed those. I didn't see those. Brian Weezer, thank you so much for joining today. Here's the Madison and Wall, folks. And again, we protect the copyright of all of our guests. Right. Get Mr. Weezer's work through Madison and Wall. Huge. You just say, do me a favor, send it to me, Brian. You were great with Tom. Blah, 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 blah. He'll give it to you. Brian Weezer with Madison and Wall there on the state of all this digital. We are humbled, I'll tell you, folks, each and every day across this nation, international. Thank you for your interest. Subscribe to Bloomberg Podcasts. Futures at -27. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Thank you so much for being with us this morning. Paul Sweeney and Tom Keene. We're going to need to look at the equity markets. Let's take a look right now at some stocks on the move today. We're joined by Bloomberg's Lisa Mateo. Lisa, what are you looking at?
All right, so we've been talking a lot about big investments in tech, right? So Nvidia in the spotlight for that big time. Its shares kind of have been all over the map. It's been up and down as much as 1%. So here's the gist of it. CEO Jensen Huang, he told the Financial Times that the company is going to spend, quote, several $100 billion. They're going to produce these U.S.-made chips, electronics over the next 4 years. So here's the thing. The latest chips and NVIDIA-powered servers for data can now be produced at U.S.-based factories that are operated by TSMC and Foxconn. But as you know, NVIDIA had its, conference this week. So Jensen Huang said that the company ultimately plans to shift manufacturing onshore. So that's the whole focus of it, shifting where the work is onshore. And that's why those shares have been like all over the map.
I mean, all over the map on the drawdown right now, Paul Sweeney's -21%. Yep. but they're up 42% in the last 12 months.
Yeah, I know.
You know, is it drawdown? Is it gloom? What's changed for Nvidia, Lisa? I mean, the answer is I'm not sure much has changed for Nvidia.
Yeah, not much has changed. I mean, the share. But what's interesting is that the shares in TSMC, other Nvidia suppliers like SK Hynix, I think it is in South Korea, they've been all over the map too because of this report. So it's affecting other.
Well, you think about it. I mean, just in the stock market in general, not just tech stocks or not just chip stocks, AI has been the story for the stock market. And all we talked about was AI. It seemed like every company, whether they're a fast food company or a pet food company, how AI is going to transform their business.
Yes,
I'm not sure if the market's lost a little of that. It feels like
as I've said, folks, I'm using AI more. It's scary to me. But I'm actually using it. What do you got
Are
next?
you trusting it? That's the question.
Exactly. What's next?
All right. A little bit of a setback for Tesla. Its shares were down as much as 1%. It issued a recall, the Cybertruck. It produced and sold in the first 15 months. Those are the ones they're focusing on. Apparently, there's a steel trim along the outside of the vehicle. It can come loose and it can cause this road hazard. The adhesive is the issue. It doesn't quite stick to it just right.
Whoops.
How big of a number is it? Tesla says that's about 1% of, like, let's say the 46,000 pickups it's calling back. So that's how big this recall is. But Tesla said it's going to foot the bill to replace those things. It launched back in November 2023, and it actually recalled the Cybertruck 6 times within that year to launch. Actually, one of those was actually similar to this recall.
There was one next to me on 3rd Avenue the other day. And it was black, and it was almost fearful. I mean,
yeah.
Are there many out where the climbs you live in?
No, and so when you see one, it's
still a
newsworthy.
shock.
Yeah, it's kind of shocking. I'm looking at the stock here, Lisa. It's down 41% this year. I mean, that's not nothing. Even if you're Elon Musk, I would think that would get your attention. I don't know.
I guess the big thing is just because it's meant as this rugged, tough, you know.
But it's
truck.
only 80,000, right? I mean, I'm sure it goes up from there, 101,000.
100,000. Yep.
But
all right.
6 recalls?
6 recalls since its launch.
That's what Kevin Tynan, he used to cover the autos for Bloomberg Intelligence. He used to say, okay, being a technology company is one thing. Bending steel is an entirely different business.
Right.
Squeeze one more in here.
Okay, a discount retailer Five Below. Not sure if you've ever been in the store.
Nope.
I have. Okay, you get cheap things, toys, candy, knickknacks. Kids love it. You get stuff for under $5.
Oh.
So the shares have been up as much as 13%. Fourth quarter results beat, right? Full year expectations were a little bit more mixed. Here's the thing. They said they're going to have to raise some prices over the pinch from tariffs. And analysts are worried about that, the long-term impact from tariffs. So you had Morgan Stanley, Barclays, they cut their targets. What's interesting is that Five Below is actually opening more stores, 150 more stores, because we've heard stories like Dollar General, Big Lots, closing locations.
Yeah.
So this is kind of a different turn to it.
Okay. Lisa Mateo, thank you so much. They're looking at stocks today. I got tear forms in my eye. We did Purdue in the last hour.
Yep.
Hail to the victors valiant. Hail to the conquering heroes. Hail to Michigan. For Lisa Mateo, this day of March Madness, the Michigan fight song.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. We welcome all of you across the nation. Good morning to those of you listening in Canada as well. In Mexico, we say good morning. Some nice notes from Mexico City recently. I haven't mentioned peso yet today. Comes back off that 19 level, a weaker pace of 20.18. Coming up, David Rosenberg, as we talk to Brian Weiser about his British Columbia. We'll talk to Mr. Rosenberg about the American economy, but also his view, his purview from Toronto. Again, out on YouTube, subscribe to Bloomberg Podcast. Thank you for your attention there. Bloomberg Surveillance this morning, brought to you by IBKR. Will the U.S. Consumer Sentiment Index, will it exceed 70.3 in March of this year, 2025? At IBKR Forecast Trader, the yes was recently 29%. Check the data, spot the trends, start predicting today at ibkr.com/forecast. Thank you, Interactive Brokers, for your support. Paul, what's your observation on the tape post-Fed? Rates come in.
Yeah, rates come in. Seeing a nice move there. The 10-year Treasury, Tom, is in about 6 basis points. We're now at 4.18%. The 2-year solidly below 4% here, 3.93%.
We will have to see. We're going to have a good conversation with David Rosenberg coming up as well. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa.
And it looks like that optimism from Fed Chair Jay Powell's comments starting to pull back just a bit. We have NASDAQ futures now down 0.7%, S&P futures down 0.5%, and Dow futures, they're off about 0.4%. The 2-year yield, 3.93%. That's down 4 basis points. The yield on the 10-year, 4.19%. That's down 5 basis points. We have the Bloomberg Dollar Spot Index up about 0.4%. We go to the euro down about 0.6% at 108.35 against the dollar. To earnings, Darden Restaurants, they have some mixed results. They run Olive Garden, other restaurants, beat expectations for quarterly earnings, but its revenue fell short. Its shares, though, they're up about 1%. Then you have Chinese e-commerce company PDD. Fourth quarter revenue came in below expectations. Its ADRs were down as much as about 6%. Now they're down about 3%. And discount retailer Five Below, we talked about them. Their shares still jumping up 6%. Fourth quarter results beat expectations. After the close, though, some bigger action. We have Nike, FedEx, Micron Technology, and Lennar. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Joining us with our question, our conversation of the day, David Rosenberg, iconic at Merrill Lynch and all of his work at Rosenberg Research in Toronto. David, you and I literally could go for 4 hours right now. Let's squeeze it in. Somebody said to me, what's the first question you'd ask Mark Carney?
Okay.
You go up there, let's say he wins the election, the election's late April. Let's say he becomes, like permanent prime minister and all that. And I said, well, to be honest, it would be, what do we need to do to get J.C. Tremblay in the Hockey Hall of Fame? I mean, that's where I'm going. I got a Montreal Canadiens fan here, David Rosenberg. Montreal Canadiens ascendant. They may play the Washington Capitals.
Well, at least we'll have the benefit of watching 4 playoff games for a change, if that's the case.
I think it was the glaciers were receding across Canada the last time Montreal was in. Hey, David, let's do the economics first here before we talk about your Canada. The Fed thread the needle yesterday. I'm with you. 1.7% growth is 1.7% growth. At some point out there, does that become disinflation or even outright deflation tendencies?
Well, it's difficult to get outright deflation in the U.S., considering how much of it is in services, which are sticky. But I would tend to agree with you that I think what was really most important yesterday, at least in the dot plots, was that the Fed only took up this year's core inflation forecast by 30 basis points. I think that a lot of people were believing that, at least the near-term inflation implications from the tariffs are going to be bigger than that. So they have core inflation going up this year, benchmarked against their previous forecast, and then coming right back down to 2.2%, which is where they were late last year for 2026. So inflation goes up near term and then comes right back to where the Fed said they thought it was going to be, at the end of last year. But they took down their GDP forecast for both this year and next year. The message being that the impact of the negative trade actions are going to have a more lasting impact on real economic activity that it's going to have on the inflation outlook.
David, do you share that concern here? Have you adjusted your GDP outlook for the U.S. economy maybe this year into next year?
Yes, I have. we haven't yet seen what we're gonna
Yes,
what's gonna happen
you're right.
on April the 2nd. But I would say that look what's happening. We have the tariffs and the retaliation from other countries. So we're tiptoeing towards a global trade war. That's a zero-sum game for all economies around the world. So that's a net drag. And we've got the spending cuts. This is a lot different than Trump 1.0 when, before COVID reared its ugly head. Program spending at an average annual rate under Donald Trump in his first term was over 4%. And now with Doge, we're seeing, spending cutbacks. We're seeing fiscal drag before anything happens on the tax relief side. So that's an added complication. The global trade war is obviously a big negative, but, I would say the biggest constraint on the economy is something that's very difficult to estimate, which is this, high and rising level of economic and policy uncertainty. The word uncertainty, everybody talks about how Powell reintroduced transitory. He mentioned the word uncertainty 19 times in yesterday's post-meeting press conference. When they first started cutting interest rates last September, he mentioned uncertainty once. Now we're up to 19 times. I mean, it looks like a hockey stick, Tom. And uncertainty is a dead weight drag on economic activity because it causes businesses to freeze up and build liquidity at the expense of capital spending. And it causes households to build their precautionary savings at the expense of discretionary expenditures. So the uncertainty alone, when you model it out, the uncertainty alone could end up having as much as a 2 percentage point negative drag on baseline GDP growth for the coming year.
So, David, I guess, the Trump administration is acknowledging potentially some short-term pain, but they suggest that there will be a longer-term gain, maybe even starting the back half of this year. Is that something you ascribe to?
Well, firstly, whatever long-term gain that we're going to see is not going to be in the second half of the year. I mean, that would potentially be years out. I mean, if the hope is that companies globally are going to hop over the tariff wall and set up production facilities in the United States, I mean, you amortize that over a long period of time, not over a few months. So I can buy into the short-term pain for long-term gain. The question really is going to be how the short-term pain influences next year's midterm elections, because it could just make the last 2 years of his presidency completely lame duck and no action. So that's the big risk. And besides the fact that, we live in the here and now, and, as John Maynard Keynes said, in the long run, we're all dead.
Exactly.
So we'll feel short-term pain while we're alive, but we'll get the gains while we're buried 6 feet under the ground. So the argument doesn't really impress me too much.
David Rosenberg with us, folks, from Rosenberg Research in Toronto. We'll get to a discussion of the politics. He and I did a panel up in Toronto a while back, and it was spellbinding to see the room fall silent as the members of the panel, led by David Rosenberg, really talked way out in front about all we're confronting right now. Let's stay on economics right now. David, I have a real trouble with fancy people telling me 1.7% economic growth is somehow good. What percentage of America is flat on their back with a sub 2% GDP?
Well, I would say that you've already had the low end of the spectrum flat on its back, if not in reverse, for the better part of the past 2 years. And then over the past year, the middle class started feeling the pain. So, right there, you're talking about, 70 to 80% of the economy. And what's been really holding the glue together has been, the top, call it 20%, who have been benefiting immensely from asset inflation and the positive wealth effect on their balance sheets that's kept the ball rolling in terms of their ability and willingness to spend. But what you're starting to see now, when it came through with the University of Michigan Sentiment Index, is that now you're starting to see the high end starting to sputter. And so we are removing now the last peg that kept this expansion going. And of course, what's happening now is that people and the people that are most heavily influenced by asset inflation and specifically the stock market, the University of Michigan index numbers showed that people are losing faith in the longevity of this bull market.
David, yeah. I got to get this in. I think it's so important. I put up a 40-year, I took back to 1947, folks, more than 40 years, chart of the unemployment rate. And you know, David, when it goes, it goes. So if we're modeling 4.1, and the Fed's got a single headline in the Bloomberg yesterday of 4.4, does that inertial force, do you just assume once that gets going, it gets higher, dare I say, out to 5%?
Well, it certainly could, but you don't have to go there because the Fed actually laid its cards on the table, even with the 4.4 for year end. Because remember, we bottomed this cycle at 3.4, and when you go up 100 basis points, and people have to recognize that it's not about the level of the unemployment rate that matters for the business cycle. I keep on hearing, oh, the unemployment rate is so low. No, it's the change in the unemployment rate that matters. And when you're up 100 basis points from the cycle low, data back to 1948, the economy has slipped into an NBER recession 100% of the time, 11 for 11.
Right.
So even 4.4 is a red flag for the economy and for the recession that never did come and that nobody believes will ever materialize. The Fed actually gave you that in its forecast yesterday, because up 100 basis points from the low, as they say in Montreal, Tom, les jeux sont faits. The gig is up.
Well, we'll have to see on that. David, I must turn to Canada right now. We are so honored to have Brian Weiser with us. He grew up in Vancouver. Really, I thought quite cautious about the tenor that he sees. What do you observe in Toronto, and particularly the stridency of Mr. Ford talking to American automobile manufacturers?
Well, I think that the thing about Ford is he came out guns a-blazing on the trade side and was very aggressive, almost emerging as Canada's leader on this file as the Liberals were undergoing their leadership campaign. And now he's, he threatened at one point, an export tax on electricity, and he's dialed that back.
Right.
I really think that, if the tariffs end up applying, the 25% tariffs apply to the auto sector, it's going to detonate the Ontario economy. But don't think for a second that it's not going to have massive negative spillovers in the United States. It's why I don't believe it's almost like a Cuban Missile Crisis situation. Who's going to blink? But, the rubber meets the road in a lot of the Midwestern states, too, that are red states. Causing that amount of dislocation in the auto sector is going to bite really hard in Canada, Ontario in particular, but wide swaths of the United States are going to feel a lot of pain there too.
So Canadian Prime Minister Mark Carney is set to call a national election within days. What's the feeling in Canada these days about how that may go?
Well, the polls have swung massively. This has been, I think, one of the most incredible honeymoon periods on record. That it was just maybe a couple of months ago where the Liberals were 20 or 30 percentage points behind the Conservatives, and the latest polls are showing that they pulled 3 to 4 points ahead. So you couldn't have ever thought this was going to happen. Now, part of this, of course, is Justin Trudeau leaving the scene, and a lot of it, of course, has been Donald Trump's attacks on Canada. And so far, that's played more into Mark Carney's hands than Pierre Poilievre. In fact, I just saw in the paper today that Donald Trump, believe it or not, is supporting Mark Carney because Poilievre said some not nice things.
Right. David, one final question. I want to get this in, and this goes back to the heritage of my affection for the Montreal Canadiens, the way you look at them, the late Tobias Lefkovich of Citigroup is well. Within the tensions, I've seen very little written about English-speaking Canada with Quebec and the French. Sebastian Page with us yesterday from Sherbrooke and, growing up in Quebec and actually playing some good hockey. David Rosenberg, how is the traditional relationship of Quebec with Canada to the west and the Maritimes, how is that within this U.S.-Canada battle?
It's a great question. Look, I have not seen this degree of national unity in Canada since the 1995 Quebec referendum. I mean, it's been absolutely incredible that what Donald Trump has done is he's made unity great again in Canada. And the Quebecers actually are now very forcefully becoming much more aligned with Eastern Canada and Western Canada. And you're seeing it across the board. A lot of Canadians are canceling their vacations or trips to the U.S. There was a massive Buy Canada campaign going on when you go to the supermarkets or department stores. I've never seen the likes of it before. But in answer to your question, it's actually galvanized national unity, French and English, that I haven't seen in decades.
Valuable perspective. Thank you so much. Mr. Rosenberg with Rosenberg Research, and of course, forever with Bill Farrell at Merrill Lynch. Futures deteriorate -32. With our news in New York City, Michael Barr.
Tom, Paul, Lisa, thank you very much. President Trump is set to sign an executive order today to begin dismantling the Department of Education. Josh Cohen, a senior fellow at the Education Law Center.
It took the federal government saying you cannot discriminate on the education front on the basis of race or gender. Now, the question is, when you remove that, will all states comply with the sort of spirit of the change in times?
Half of the DOE staff has already been laid off. Hamas is claiming a rocket attack on Tel Aviv. Israel's military says it intercepted one projectile while two more fell in an open area. All this after Israel began a limited ground incursion into Gaza following a wave of deadly airstrikes. We get more from Bloomberg's Dan Williams in Jerusalem.
It began with airstrikes 3 days ago. Now we've seen measured incursions on the ground. It's worth remembering that Israeli troops and tanks never actually left the Gaza Strip during the truce that expired some 3 weeks ago. They had put peripheral positions along a de facto buffer zone inside Gaza's borders with Israel and Egypt.
Bloomberg's Dan Williams. Gaza's Hamas-run health ministry says the latest Israeli strikes killed 85 people across the Strip overnight and into today. Canadian Prime Minister Mark Carney is set to call a national election within days, seeking his own mandate from voters at a time when the country's businesses have been shaken by a trade war with the U.S. Carney likely to ask for Parliament to be dissolved on Sunday, according to multiple news outlets. He's leaning towards setting April 28th as the voting date. As the annual NCAA tournament kicks off, some Americans are skipping March Madness, or at least they aren't trying to predict who will win. A new poll from the Associated Press shows that about 7 in 10 U.S. adults say they never fill out a bracket for the NCAA men's or women's basketball tournament. Global news, 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
You got to love YouTube live chat. Harry, thank you so much. Does that mean Canadians are going to sell Florida real estate? We say good morning to Hallandale, Florida.
Okay.
Broward County. I guess that's where many, many Canadians go. They go down to scenic
love it.
Hallandale.
A lot of them go to that Phoenix area, too. I was out there and I see a ton of Canadians out there on the golf course.
You know, I mean, it's near Hollywood, Florida.
Yep, there you go.
I must admit I've never been there, but good morning. It's like, it's north of North Miami Beach.
Yeah.
That's the way they roll.
Sure. I mean, if I'm in
Thank
Canada,
you, Harry, for that.
I'm spending the winter down there.
I'm learning my geography every Hallandale, Florida.
Okay.
Good morning. That was great. What'd you take away from David Rosenberg?
There's definitely some concerns out there for economic growth here to the extent that, I guess it relates in large part to how extensive these tariffs end up being come April 2nd, for example, is probably going to be a big day, I think, for the market.
We stagger, like every 2 weeks, there's a new date.
There's a new date. I think we're going to get some clarity on and around this April 2nd date. Who's being tariffed, what degree, what are the reciprocal tariffs? Maybe we'll get a little bit more clarity there, and then perhaps the market can start moving forward there.
My single observation from our brilliant guest this morning was Monica from Morgan Stanley saying under 2% of our jobs are federal workers.
Yeah.
I never would have guessed that.
No, I would not have.
I would have said probably over the first beverage, I'd say 6%, and then I'd say 7% over the second beverage. And
yep.
It's a lot less.
Exactly.
I was really surprised by that. The tape deteriorates. That's what you need to know after the festivities yesterday. Green on the screen. The VIX closing under 20. Barely, but we'll take it. VIX turns around 20.72 right now. Futures negative 32, down 0.6. 0.1%. On YouTube, subscribe to Bloomberg Podcasts. From New York, Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures. Well, they're falling this morning. We also had more economic data out this morning. Initial jobless claims, they increased by 2,000 to 223,000. That was slightly below estimates, but Bloomberg Intelligence says the impact of DOGE cuts, those will be felt because secondary effects like federal contractors letting go of workers, that starts to take place. BI expects the unemployment rate to reach 4.5% by year end. We have NASDAQ futures down 0.7%, S&P futures down 0.6%, Dow futures down 0.5%. The 2-year yield 3.91%, down 5 basis points. The yield on the 10-year 4.17%, and that's down about 6 basis points. Some deal-making news. QXO, well, that's agreed to acquire Beacon Roofing Supply. It's a deal that values a company at about $11 billion, including debt. Then you have Couche-Tard, 7 & I. They're looking for potential buyers for their overlapping U.S. convenience stores by the end of the month. And a group that includes STG Partners co-founder Bill Chisholm said to be a front runner to buy the Boston Celtics. Sources saying that transaction could value the Celtics at more than $6 billion. He was born and raised in Massachusetts. Diehard Celtics fan. There you go. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
Hey, Lisa, thanks so much. We're going to do this, get the market open here in 3 minutes, 4 minutes, and speak to Anna Wong of Bloomberg Economics. And we'll do all the economic chat. Right now, we're going to talk about the job economy because Dr. Wong mentioned this the other day. The real trauma down in Washington and, frankly, across America is a lot of federal workers lose employment. We got a wonderful note in. Thank you for all of you in Washington who listen to us. I'm absolutely humbled at what's called time spent listening of Bloomberg 99.1 FM in Washington. You know, it's Nathan. I mean, we're following Nathan Hager.
Amy Morris, Nathan Hager.
That's why.
The leadership down there.
We got nothing to do with it. Yep. But Anna, you know, I got a wonderful note in today. Thank you so much from somebody working with BEA and BLS. Describe, these people are all threatened. The wonderful Erica Groshin, who's iconic. I mean, I did work with her years ago. And Dr. Groshin's in the same boat. I guess if you were still in government, you'd be in the same boat. Describe the tension of PhD economists slaving away in Washington who are wondering if they got a paycheck on Monday. Describe that, Anna Wong, please.
Yeah, I mean, I think the tension is when you look left, look right to you, if you're a resident of the Washington, D.C. region, one of the persons to either side is affected by the cuts. So there's a significant anxiety, but particularly for people working in BLS and BEA, there is anxiety about how federal statistics are going to maintain the standards. So this tension and this anxiety began about 2 or 3 weeks ago, and you know, with I think Musk first raising the question of whether government spending should be separated as a line from GDP. And then, so this was the subject of anxiety in the NABE Conference, National Association of Business Economics, 2 or 3 weeks ago in Washington, D.C. And there was a panel on ensuring the quality of statistics of the federal government, for which I was on. And there was just a lot. Tremendous anxiety
Right.
in that panel.
Bureau of Labor Statistics folks, and Jack Welch of GE had an uproar 15 years ago by going after this group, and Mike McKee, among others, defended the institution. But, it starts back in the 1880s, codified in 1947 by Leontoff and all the data that was invented out of World War II, Dr. Wong. And then you got Eric Hagroshin's leadership. I'm going to call it 10 years ago. William Beach was involved there as well. What does somebody on the 14th floor at BLS do at one of those desks? Like, what do they do to help Mike McKee with the jobs report the first week of April?
So the BLS economists are some of the most congenial folks, and they're actually available to public. There's a phone number, you call them, or you write them an email, and they would write you back with a lot of very good information. And I think Wall Street knows that, and they really do serve as the public goods. But given that their budget is being cut, I think people at the stature of the commissioner are probably worried about how are we going to reallocate the budget to ensure that we have as much money devoted to, the job statistics, ensuring the survey size and the CPI survey size are not cut, because that's a real question. For CPI, for example, they are experiencing a threat of not being able to afford the contract for a lot of price database that they have been given in the past year.
This is hugely valuable. Dr. Wong, thank you. Stay with us, Dr. Wong. We'll come back, and Paul Sweeney's looking at me like going, can we talk about like the economy, the Fed, what she thinks 4.4% unemployment is going to be? Let's get the market open. We're a completed bracket. You didn't go with the University of Chicago for Dr. Wong. You went with Michigan.
No, I didn't. I know, because of David Weston. I got to go with
No
David.
one's over 6 feet at Chicago. That's what you
Sorry. All right, let's get to the markets right now. So we're off and running. We had the S&P 500, and it looks like a lower open. Down 0.7%, 39 points, 5,635. We have the Dow down about 0.5%, 251 points, 41,716. We go to the NASDAQ, down nearly 1%, 167 points at 17,585. So quite a different look from yesterday. We go to the 2-year yield, 3.92%. That's down about 5 basis points. The yield on the 10-year, 4.17%, and that's down 7 basis points. We have the Bloomberg Dollar Spot Index up about 0.5%. And now as we look to the Mag 7, it looks like leading the losses would be Google, Alphabet's Google, down more than 1.5%. That is your Bloomberg Opening Bell report. Paul and Tom.
Lisa, thanks so much. Welcome all of you across the nation, mopping up off the Fed, off claims data as well. Paul with Anna Wong.
Anna Wong, Chief U.S. Economist for Bloomberg Economics. Anna, what did you hear from Fed Chairman Jay Powell yesterday? What stood out to you?
I thought that he was being very wily and very misrepresenting the stance of the FOMC. I mean, he came across as dovish, but that's not at all what the SEP is suggesting. And of course, our colleague Craig Torres really stole the show with the question about transitory economics.
How rude was young Torres? My word.
I told Torres that he's a troublemaker because he distracted the markets from the real meat of the substance of the SEP, which is that there's a big upward shift in inflation forecast at the SEP. And though Powell downplayed it, saying that baseline is transitory, you could see that even for 2026 core PCE inflation forecast, you have basically now 8 people as opposed to 4 people who see 2.4, 2.6, or even one that's seeing 3.2% core PCE inflation next year. So you just need 10 of those to shift the 2026 core PCE inflation. But what's stunning is that in 2025, you have now 17 FOMC members marking up the inflation as opposed to only six of them. Before, so I think Powell totally downplayed this, and that also the dot plot also shifted upwards, and we would have only needed 2 points, 2 dots to move the dot plot up. So I think he totally underplayed a lot of the hawkish.
And I can assure you, John Farrell agrees with you. John was hype. You know, the steam was coming out of his ears. I mean, John was apoplectic over the dovish tone take. He's with Dr. Wong. No, it wasn't. Anna, thank you so much, particularly for that perspective on economic jobs in Washington. I have no idea what to do with the tape. You know, I'm looking at the sell-off, and I can just, I don't know, is it because of the Department of Education announcement at 4 p.m. today?
Yep.
I don't think it's people's brackets, you know. Does Wall Street, does it slow down? Do people start watching the games?
I think a little bit, particularly
at 2 o'clock.
Yeah, I think so. Sure.
You know,
I mean, so many games happen at one. You know, so one time. It's gonna be. This is the weekend. If you're a college hoops fan, this is the weekend for you, certainly. So
I mean, you know, you have to see here, and you know, I'm looking at Mateo. I mean, you know, it's the Mateo house. They're all tucked snug into their beds. She's going to be with a case of Pabst Blue Ribbon at 10 p.m. tonight watching the Michigan Wolverines. The UC San Diego Tritons? Is that right?
I don't know.
I guess.
But the best one is the University of California at Santa Cruz Banana Slugs.
Are you serious?
They are banana slugs.
I think I might have picked them because of that.
I got to check in with Alex Steele to make sure she's got her bracket because she's also
she's doing it too?
I don't know if she hasn't. I'm going to give her some time off in our 10 to 12 to get her bracket in by 12.
Let's be sure that Scarlet Fu can come in and help Ms. Steele beat us as well. You know Lisa's going to do better. On the data front, I'm going to call it a sell-off, but not severe, down 0.4%.
Yep.
Dow down 171 points. Now I'm going to call churning would be best. 20.57 on the VIX. We're higher by 0.69 points. American oil 66.99 a barrel. Critically DXY over 104. It's Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks losing steam. This is on the eve of a massive expiration of options on Wall Street. Citi says tomorrow's so-called triple witching will see about $4.5 trillion of contracts tied to stocks, indexes, and ETFs mature. NASDAQ down 0.2%, Dow down 0.4%. Same for the S&P 500. The two-year yield 3.93%. That's down 4 basis points. The yield on the 10-year 4.19%, and that's down about 5 basis points. With the Bloomberg Dollar Spot Index up about 0.5%. Shares of Nvidia, they're up about 1.5%. CEO Jensen Huang tells the Financial Times the company wants to spend several $100 billion on U.S.-made chips and electronics over the next 4 years. Then you have Tesla shares. Well, they're down nearly 1%. This is after a Cybertruck recall. And Darden Restaurants, they run Olive Garden and other restaurants. Well, it beat expectations for quarterly earnings. Its revenue did fall short of estimates, but its shares right now up nearly 7%. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Greatly appreciate it. We're going to extend this discussion. It's so important. Thank you to David Rosenberg and Brian Weiser for their discussions of their Canada from Vancouver, from Toronto. This was the biggest success in international relations Daniel Kurtz-Phelan had to take over the iconic foreign affairs, and everybody said, right. And he's at the ball. I mean, if you're up in Boston, it's that homer over the turnpike onto the roof of the Cask and Flagon. He is at the ball out of the park. The latest issue is on fire. It sits on my thing next. All of this, folks, it's like one or two expensive martinis to get the absolute best in international relations. For example, on their website, Foreign Affairs website, you can read Robert Lighthizer, who established Trump Trade One. You could read Gordon Hanson of Harvard, definitive on trade policy. And right next to it, and they both appeared on the show recently, Doug Irwin of Dartmouth was with us, The Incoherent Case for Tariffs. Daniel Kurtz-Phelan joins us now with his magnificent magazine. Daniel, you guys must be going 24/7 as well. What do Bone and Irwin say about what we're witnessing in Washington?
Well, thanks, Tom. Always appreciate the marketing. We should probably be integrating that martini line into some of our marketing copy. So I'll suggest that to our business side. It's a wild time in international politics and American politics, as you all know extremely well. You know, the Bone Irwin piece, what we asked them to do, these are two great economists, Doug Irwin, probably one of the greatest authorities on trade in the United States at this point. We asked them to really look at the different arguments and take them seriously, different arguments for tariffs. Bob Lighthizer, as you noted, has made, sophisticated cases for the use of tariffs and rethinking the trading system. You saw the Biden administration, frankly, take up some elements of that and run with it in ways that would have seemed surprising not very long ago. But what Bone and Irwin do is look at the different arguments you can make. Trump has, of course, talked about tariffs for a long time. He says it's the most, beautiful word in the English language. This has been one of his fixations for decades at this point. And what they say is that, look, tariffs can work for various ends. If you really want to foster domestic industry, if you want to use it for leverage over other countries, as we've seen in the last few weeks, all of that works. If you want to raise some revenue with it, that works. The problem is that Trump thinks you can do all of these things at the same time, and each one of them in some ways undercuts the other. So if you want to use, to take the example that we've seen recently, tariffs for leverage to get other countries to change their behavior, whether that's, Mexico sending troops to the border or Canada making at least sort of performative moves on fentanyl, though I'm not sure there's any real substance of that, then you're going to end up taking the tariffs off relatively quickly, and they don't have the other effects. If you leave them in place despite that, then other countries aren't going to see them as, reasonable incentives to change behavior. So you could kind of target them here, but trying to have them do all these things just becomes this incoherent mess with all the uncertainty for business and everything else.
So, Dan, when we think about the discussion in tariffs, which has obviously ratcheted up dramatically over the last several months, is globalism, which is a theme many of us grew up with in business, is globalism dead?
Well, it's certainly dead in the United States. I think what's really interesting right now is that you see much of the rest of the world continuing with something that looks, fairly familiar to those of us who would have been looking at some of these dynamics a decade or two ago. So you see, Europeans, for example, continuing to look at new kinds of trade relationships, both with each other and beyond. I think you'll see interesting dynamics between Europe and China, for example. Europe had made, a pretty hard turn against China and sees real economic threat, but at a moment when it doesn't have a lot of options, I think you'll see more activity between Europe and the Chinese, or Europe and parts of the global South. And certainly in Asia, they're still very, very committed to something that looks a lot like, old school globalism. So I think what could happen is it'll become, in some ways more fractured. You won't have this sense of a true kind of global trading system, but you'll have lots of regional systems. And then you'll have parts of the world without the US that will continue to move forward. I think the administration thinks that we have the economic leverage, the economic might to avoid paying real costs for that. I think we'll see in time whether, the US feels left out of something that is bringing benefits and bringing power to other countries, especially China.
And Dan, another hallmark of the Trump administration has been a greater sense of nationalism, maybe at the expense of globalism, and pulling back from some of the traditional relationships, whether it be NATO or just our support and how we view Europe, much less our trading partners, Canada and Mexico. Do you believe that would outlast the Trump administration in the sense that let's just focus on ourselves here?
Well, you do see it's not so much a turn inward, but a real interest in making deals with other strongmen. So you see Trump much more interested in this kind of great power diplomacy with Putin or with Xi Jinping or with, Narendra Modi or other kind of strong leaders that he sees as able to really do business with him, really make deals, while he's beating up on allies and really using leverage on allies. So that's, I think, a pretty different vision of the global system than we've seen in a long time. There are a couple great pieces in the issue that Tom mentioned that try to make sense of this.
Daniel, I could go all day about Foreign Affairs Magazine, but because of your expertise in China, I've got to ask. Folks, the book is The China Mission. It won every award of 2018. Daniel Kurtz-Phelan on George Marshall, dragged out of retirement. General Marshall, just shut up and go to China and fix it for us, which, of course, George Marshall attempted to do. How do we repair a China-U.S. relationship, or is it forever on a bipartisan basis fractured?
It's a great question, and it's been one of the really fascinating things to watch in the first couple months of the Trump administration. It was really during Trump 1 that you saw that bipartisan consensus, that hard line on China start to form, and Trump was, of course, one of the big drivers of that. What we've seen in the past couple of months is signals that he may take a very, very different approach this time. And I think the Chinese government is really kind of waiting to see what that looks like and starting to develop options for what a kind of a real deal might look like. I think I'm skeptical that you could really get a kind of grand bargain between the U.S. and China that would wipe away all the really complicated issues, not just about trade and technology and fentanyl, but also about Taiwan and the South China Sea and all the potential crises in the relationship. So I think you saw in the last part of the Biden administration an attempt to at least create some stability in the relationship. Right. It's not a return to anything that we would have seen a while ago, but to at least prevent it from really going off the rails in ways that it seemed like it might for portions of the last few years.
I can't say enough, folks, about foreign affairs. A blistering essay by Mariana Mazzucato on where are we going with the globalization Paul Sweeney just spoke of. Daniel Kurtz-Phelan driving the ship for Foreign Affairs Magazine as our lead editor. Just can't say enough again about the need for subscription. Bonus round, the magazine is in large font.
Really?
So mere mortals can actually read it. I told Richard Haas once, I said, Richard, I'm blind. I need it in large font. He's the one who delivered the goods. Daniel Kurtz-Phelan there with Foreign Affairs Magazine. I don't know what to make of the market. We were down like 250 Dow points. We sort of bounced back, sort of kind of like. Yields, I mean, look, Paul, the yields are like, wow.
Yields are coming in
here, The 10-year yield is under 4.20%.
It is. And so we've got yields pulling back here a little bit, Tom. The 2-year, 3.93%. So, we were up around that 5% just a cup of coffee ago, as you would like to say, but here we are below 4%.
There's something going on here. You got dollar rally, you got DXY out to 104, yen 148.76, euro dollar gives way 108.22. Well, 107 euro would be something. There's sterling off Bank of England 129.43. Renminbi doesn't give me much today. Mexican peso from a 19 level weakens out to 20.24. Is well. I'm not going to mince words, folks. It's odd out there. Bloomberg surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Just Mint with us right now. We're going to finish the hour strong and a really interesting economic data here with Alex Steele and Paul Sweeney in a little bit. So there's this thing called the non-profitable tech. It's actually a basket or an index. Jess Menton loves this thing. And you got to go back like to early December, November, because it's down from the peak. It's down 25%.
Yeah.
Let's start with the idea Nvidia is not in the non-profitable tech, right?
So Peloton, one of Paul Sweeney's favorites, is housed in here, as well as Roku. So when you think about some of these non-profitable tech type of companies, obviously more volatile, and also they aren't as profitable, clearly, as when you think of the bigger tech names like an Nvidia or an Apple or a Microsoft. So you see a lot of those that are younger and or more reliant on funding, and especially more sensitive to the interest rate outlook, be more volatile. But those were the ones actually leading the way when you're looking at non-profitable tech yesterday, following the Federal Reserve decision and Fed Chair Jay Powell's comments at his press conference. We saw that, also the Russell 2000 and the most shorted stocks. But today you're seeing reversal where you're seeing the Russell 2000 down, you're seeing non-profitable tech down again, but you are seeing Goldman Sachs' basket of most shorted stocks higher again today after rallying almost 3% yesterday.
Basket of most shorted stocks?
Yes.
What's that?
The ticker symbol on this, it's GSCB. SAL. It's a bit of a mouthful there, but it's up about 0.4% after being up close to 3% yesterday too, as well.
Somebody just fell in the sinkhole out on I-80 trying to write down the symbol.
Right. And it was, well, I mean, talk to Goldman about what they're using there for some of those basket names, but nonetheless, you're seeing most shorted still outperforming the broader market again today.
Now, in the time we've got left, I mean, I know you and Lisa Mateo aren't in speaking terms, but the basic idea is if the cards play out correctly, it's going to be Texas A&M against Michigan.
That's right.
In the that could happen.
That could happen, hopefully.
And she's got Michigan all the way, which I don't understand.
Yeah, no, I feel like we should change that. Obviously, you know who I'm going to be rooting for.
Have you done your bracket?
I have not.
Right, so
I've been a little busy.
When you go back to your desk, I know you're writing 10 million different pieces of journalism. BRKT, go.
BRKT.
Spend 5 minutes. I'll talk to your editor. It'll be fine. You know, you're the editor. You're the boss. Wait a minute, you can do it.
I still have bosses above me, though. Maybe I'll let
I have Texas A&M going 2 rounds and then losing to Auburn.
I don't know.
That's not. I haven't beaten Yale. I mean, they can beat up on the Eli. So then we'll see how it goes.
But this is BRKT Go.
Yep.
Yeah.
That's how you roll. That's how you roll.
How did I not know about this?
Are you guys doing anything in the stock market about the job economy?
Yes, of course.
What do you see? Give us one pearl of wisdom on that.
Well, actually, you can start to see that more kind of gleaning towards what like the earnings outlook and all of that would be. So we start to see what obviously companies are saying on earnings calls, but we have a lull because we aren't going to have JP Morgan report until April 11th.
Exactly. Paul Sweeney taught me how to find that.
Yeah, definitely. I always go and confirm on their investor relations pages, though, for especially the banks for that. So we still have a little bit of time before that, but you're starting to see a little bit there in the earnings estimate revision momentum.
Just Menton with us right now, and now we turn to Paul Sweeney, still tweaking his bracket. Would you explain to me why at Duke they have to play Cascada, which is European dance music, every time we touch, is like the Duke theme song at the stadium?
I'm not sure what's going on there. So
you when you go down, are they playing some sappy Euro songs?
No, we've got all the Duke fight songs that we all learned our first day on campus. So we know all that.
You
and
get
all
the
this.
fight songs as well, because I was told they play like every time we touch or something.
I don't know.
Here, which is like it's a modern thing. Yeah. It's after you were there. It's the kids.
Yeah.
It's the kids.
So we'll see.
Headline just out, very important. This is from Sportico. William Chisholm to buy NBA's Boston Celtics in $6.1 billion deal. Let's all hope that Jess Menton fills out her bracket. Good morning.